All right, welcome back to the channel, Crypto Trend Trader, with our Friday market wrap up. It is 3 p.m. Eastern Standard Time, and we've got about an hour left on our traditional markets. Today we're going to be running down our typical assets, sort of like a rapid fire. Going to try to hit as many as possible, as fast as possible. Sure, we'll throw a little rant or opinion in there as well. Before we get started, though, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so just getting started here. As you can see, everything is playing out perfectly. Just like we discussed on the 10-year, the top of the channel, this red line here, is much less important to us. But the key level that we're watching here is our Fibonacci support lines. So while we have basically broken back inside of the channel and lost that red support line, that's completely fine. What we are looking to happen is actually find support here on the 618 Fibonacci level in yellow. And once again, just like we had spoke about back here, what we're expecting is basically just to oscillate inside of this range. So the bottom support line being 1.45% on the 10-year. And then the top and our target overall being that 2.06. So we're essentially just expecting to find support here somewhere along these lines, whether it's the white ascending trend line here at the bottom of the channel, or just the 618. This would be a key level that we'd be paying attention to. In the event that we did lose this level, I would expect us to pull back next to the 0.5. I don't think that's nearly as likely to happen as once we broke into this key area right here. Basically the range is going to be the 786 to the 618. And then also, just historically speaking, when we look back at it, although we could find support as low as like 1.34 and break down slightly below here, I think we're much likely to stay above or sustain roughly above the 1.45 level. So, but again, we were expecting this. We spoke specifically about it over the last couple weeks, so it's nothing to be alarmed about yet. Next is the DXY, the dollar. This is dollar in relation to a basket of currencies, primarily the euro. So just like we discussed before, as Europe is catching up on vaccinations and also reopening, we would obviously expect for this situation to take place, where the dollar weakens in relation to the euro after it's been strengthening, or in this case, like the entire basket. So once again, working out exactly like we discussed, we expected it to basically top out at the top of the range, as that's what's been taking place. But obviously we got above the 200 exponential and simple, and we don't expect it to just sell back off and continue down to a lower low, although that is a possibility. What we do expect to happen is essentially this bottom white trend line to get tested. So obviously the key levels we were paying attention to is exactly where it topped out, right here, the heart line where it found support, and then of course the bottom of the range here at like 91 basically. So what we want to see is essentially we bounce at 91, come back up, and then we see how high do we come back up. But essentially at this point in time, I'm looking at this as a low. Matter of fact, can go ahead and if you break this down, there's a lot of ways you can break this down, but I like to use the Elliott wave method. The Elliott wave method is more of an exact science, but when I use it, it doesn't have to be a 100% exact science, but it essentially talks or speaks more to like the actual psychology of the markets. So while there's specific rules, like the 4 is not supposed to come down deeper than the 1 on a highly leveraged market on long enough time frames, sometimes you'll see a rule like that violated on like a daily, but then if you zoom out to like the weekly or the monthly, it won't. It'll just be like a wick down here. But in this case, the most important thing is obviously is when this does come back down here, it just represents the psychology of an initial wave up and then giving back some of that wave, but we have a low, then a high, then a higher low. And then again, we have another wave up, and then it tops out, and then we give back some of that wave. But once again, it makes a higher low and a higher high. So essentially what we're looking for is just continuation of the uptrend. So at this point in time, you can look at things like this and then have it correspond to like a Fibonacci level or Fibonacci extensions, etc. So in this case, I'm going to take our fib tool and I'm just going to put the extension from the top of the 1 to the bottom of the 2 Let me make this a little brighter. And we can just get like some kind of target to the upside or a rough idea based on prior experience what happened. So the first, from the 1 to the 2, the extension target was over the 1.618 but less than the 2.618. It was around the middle roughly. So if we take that back off now, and then, again, we'd be estimating because we don't yet have a bottom in here at the 4, but assuming we come back down and find support at the 4 at the bottom of that channel, we would expect our 5 to come up roughly above the 1.618 to the 2.618, just like we did, and that would roughly put us at that exact target in between like the channel break on the downtrend and then also our ascending broadening wedge break on the uptrend. So, and then if we zoom way out here, that obviously corresponds to like this key green support line that we had broken down from, or potentially if we overperform and come up to the 2.618, that lines up perfectly with the overextension of the green, the blue trend line. And then also, if we pay attention to our yellow Fibonacci level from the top here to the bottom right here, the 0.5 level is exactly where we put it at for like our regular performance, and the overperformance will put us up at the 618 level. So, once again, we have a bunch of things lining up, giving us like these rough targets. They don't have to be an exact science, but again, they represent more than not like the actual mentality of the markets, and then give us like legitimate attainable targets that are not only realistic, but when multiple targets line up based on multiple techniques, the likelihood of that area being significant is much more likely. Now, it doesn't have to just stop right here and that's the end of it. We could easily get a wick outside of this area. We could easily break down from this area. But in the event that we do break down from this area and we fail to put in like a wave 5, and this was in all actuality just like basically 2 waves and then a break, we can already come up here and start putting in targets for where this would potentially go to the downside. Now, once again, I don't think that this is likely to happen, but let's say like all of a sudden, everybody comes out and the IMF says, okay, look, the U.S. is no longer the world reserve currency. We're going to take a basket, and the basket's going to be, a combination of all these different currencies, and et cetera, et cetera. And then all of a sudden the dollar breaks down, loses strength. People don't want to buy it. All of a sudden, drops down here, and then what happens? It hits our target down here, way back when. So once again, we have multiple things that could potentially line up to the upside or downside, although I always give overall priority to a trend. So if we had this long downtrend here, we break out of it to the upside, more than likely we would stay inside of this smaller trend here and then continue to the upside. And then once that tops out, we'll have to play it by ear. But once again, everything playing out perfectly until one of these key levels breaks, whether it's to the upside of our ascending broadening wedge or to the downside of our ascending broadening wedge. I would not expect anything to change until it does. Typically, when a pattern breaks, it's going to break one time, and then after that, we will reevaluate. But we already have our targets in place, now in both directions, regardless of what happens, we can anticipate it. But no trend will ever just sustain in one direction forever. There's always going to be like breath in and breath out of the market. So, that's exactly what we would expect to happen. And that's exactly what is happening. But it's always better to have like, a positive and negative or an up and down scenario for everything. So we're going to go ahead and move from there into, go down our indexes real quick. So here we have the SPY, S&P, basically new highs, nothing changing here. We're essentially expecting continuation to the upside. We did leave a gap down here at the breakout. I am overall, bullish on traditional markets, especially the indexes have been performing, moderately well recently. Dow Jones, same thing, all-time highs, continuing to the upside, strengthening to the upside. IXIC, NASDAQ, once again, a little less strength. It did basically top out sooner than everything else. This one is, not quite up at its all-time high, but it has broken above the 886. And typically when something comes above the 886, it will retest this all-time high, whether it tops out there again or continues slightly higher or just gets overall continuation. This thing overall looks decent. We're in a strong uptrend, moving up to the upside. Again, we're watching out for some bearish divergence on some of these, but overall looks good. Russell is by far the weakest of the indexes. It has essentially broken out of this descending trend line, although, we basically only have 1, 2, and then sort of like a resistance line here. Typically for a trend, I like to look for at least 3 touches before you can like completely validate it. But oftentimes, it will break on like the 3rd touch. So, you never know what's going to happen with this one. But again, we got back up to the 618, which was our initial target. 61.8% retracement from the top of the wave to the bottom. But, our next target to the upside is going to be 2303 for an internal retracement. But once again, this is by far the weakest, which, fundamentally makes sense also because, obviously most of these indexes, most of the stock market is being like propped up or held up by like these massive corporations, so that's what you would expect, as where like a lot of these smaller companies, like the 2,000 companies inside of this index are, not nearly as strong. Although some of them are strong, the majority of them are suffering more because they don't have, basically like that market share that some of these other top companies have. So VGK, this is the Vanguard. This is basically the way that if you're in the United States, you'd be trading the FTSE typically. So, this is doing exactly what we spoke about. Once it broke above that key level, the key Fibonacci level and previous high of like, I think it was since 2013, we expected continuation. In this case, the continuation is taking us exactly to that key level we paid attention to. We have basically, essentially this thing put in a low back here and then put in a low again. This previous low was back in 2009. The all-time high on this thing was 2007. So basically, this corresponds with the euro strengthening, in relation to the dollar, and then obviously like the reopening of a lot of these various like places, facilities, whatnot in Europe as, they basically catch up on vaccinations and obviously like reopenings, businesses starting back up. So here we have basically a ascending trend line from back here at the high in 2011, then here at the high in 2014, then here at the high in 2018, and now here we are basically just about to touch it in 2021. Now, what we need to pay attention to, though, is the typical, assuming we don't count this initial little bump up right here, and we count this one perfectly, this one slightly overperforms, and then this one, basically is the touch. So instead of having our line go from here to here, and then it's like angled way up, I'll put one in place so you can just kind of see it, just so you can kind of see the mentality of why I'm not picking these 2 exact points right here, is this would just basically be like an underperform, or there's no actual touch of it. As where if we have the perfect touch here and the perfect touch here, it's more likely that we got basically like a slight overshot, of it and then sold back off, than it is that this one was a complete undershot. But either one could be relevant, and you could chart it either way, and it's never a bad idea to chart it both ways, but there's much less useful information if we chart it this way, as we didn't get even close up to it. Now, if we start overperforming and we burst straight through this thing, then we will start paying attention to the 886, or this blue line, how it's drawn in right now. But more likely than not, I would look at it like this, where we have 2 very clear tops, and then here we have like a slight overperform that sells off. Each previous time that we touch this top, this time we came down afterwards 31%. This time we came down afterwards 30%, 31%, basically exactly again. And then this time when we topped out, that was our obviously capitulation event, 43%. So in all likelihood, based on our previous data, once we get up here, more than likely what would happen is we would come down another 30%, 31%. And what that's going to take us down to is a key level. So when we topped out right here, we came down to a key Fibonacci level right here, the 382, and then came all the way back up. And then obviously 382 was substantial, 382 was substantial, came up and put in a new high, and then came back down. When we came back down this time, you can see very clearly also the 0.5 level was important. Now, it didn't stop exactly right at the 0.5, but if you charted individual stocks out of this index, you would probably see the majority of them touching these Fibonacci levels better. But because of the variability in an index fund, you don't always see like those super crisp moves like that. Sometimes you will, sometimes you won't. So here again, we came down to the 0.5. Each time we put in a slightly higher high, internally, and then here we broke out of this internal structure by taking out all these previous lows. But in the end, what really happened, we had a low and then we had a higher low. So that's great. So we're putting in basically a low and then a higher low. We're putting in a series of higher highs. So when this breaks down here, what we want to see is that we don't take out this previous low right here. We definitely don't take out this previous low right here. But more than likely what's going to happen is we're going to come back down here to like roughly the 382 to 0.5 level. So all we want to do is just basically see this thing, even if it shows some temporary weakness, show overall in the trend strength. So this has been showing, you know, basically it topped bottomed out in 2009, and now we're literally just making a new high since 2009. But eventually, if this thing shows enough strength, we would expect it to get back up here to its all-time high. So next key levels we're paying attention to, roughly where we're at right now, to, you know, essentially 71.66. Like I always say though, if we make it up to the 88.6, which is that $72 level basically on this index fund, I would expect us to come back up and, you know, retest that all-time high. And if we make it back to all-time high, you know, that's basically saying like Europe's economy is booming, it's reopened, you know, everything's back to normal or better, you know, or else obviously like the assets are just overly inflated. So, but regardless of that, this thing has been a very, very big underperformer. You know, basically in the last, like, what, 13 years, it's been an underperformer in relation to most other stock markets. And now here it is finally catching up. So although it's a laggard, there's definitely still some potential to the upside. But at this range, I would much rather be taking short positions off the top of a range or selling support and buying resistance at the bottom of the range versus, you know, just taking long positions here. Now, in the event that we like break out, consolidate, then it would look like maybe we're going to get continuation. But again, I would rather see that actually happen. You know, I don't really like buying breakouts or taking positions at the top of a range. So, but I would like to remind you, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research and trade responsibly. What's up, Jason? How you doing, man? Good to see you. Yeah, no, that's right, man. We've been crushing it lately. I mean, literally every call we've been talking about for like months now has been playing out perfectly. So I like to think that everybody else is doing quite well. You know, obviously I'm not telling you what to do, but I'm telling you what I'm doing. And I know how I've been doing lately. So let's look at the XLE. You know, we had talked about this head and shoulders on the, you know, energy ETF or energy sector rather. You know, the longer, just like I said, the longer this goes sideways, the less valid this looks. So at this point in time, the head and shoulders looks completely invalidated to me. But what I'm seeing, because I like to see that symmetry, if this would have broke down right away, it would look much more realistic. Now we're just going sideways, but we are still putting in like a high, a low, a lower high, a lower high with like that same low here in white. So to me, that still just looks like a descending triangle, which is still a bearish pattern regardless. So if it breaks down later, you could just say, oh, it was a head and shoulders, but there was distribution taking place. You know, if it breaks down, you could say it was just a descending triangle playing out. Or, you know, obviously, if it breaks up, it's just a failed breakdown. This is not 100%, but it is a bearish pattern. So the measure move from just the descending triangle, you know, would essentially take us down to that key level down here, which is the 528 moving average and the 89 moving average of like $44.85. I mean, this thing isn't a massive mover. That's like an 8% move to the downside. But still, you know, I'm overall bullish on this thing. It's put in a low, and then it's putting in like a series of higher highs and higher lows. But, you know, this is potential topping pattern that we're looking at right here. It does not mean that it's going to come back down and take out that low. But more likely than not, you know, at this point in time, we have put in the top here, and that we're going to at least come down and retest the 236 or potentially like the 382, or, you know, if it sells off heavily, the 0.5. So this thing could have quite a bit of a move down. But overall, this is something I'm looking to purchase, you know, into like fundamentally and technically, I think it's going to be strong in the long run. So as you know, obviously energy is key for everything, including infrastructure. So and then the ICLN, this is the clean energy ETF, another one that I'm paying attention to. Not ready to get bullish on this thing just yet, as again we have a series of lower highs and like essentially like that same low or slightly lower low based on candle closes. We're bouncing the 200 exponential and simple, but I want to see it at least break out of this key red resistance, or ideally the purple resistance here. I do have a couple potential trade setups in place for it to retest the high or go to new all-time high. But in the meantime, we're waiting for this thing to show some strength. We are seeing now, though, the beginning signs of life out of this as we have the histogram above the red slope line. It is still red, but that's like basically 2 of our buy signals on this. Once this flips over blue, that will be our 3rd buy signal and basically telling us that we want to be long in this based on the TJD TDMACD. And if you're not using these indicators, I highly recommend that you go down into the description and go search them out on TradingView and at least start getting familiar with them so you can either use them on your own or at least better understand how I'm using them. And then also obviously we have out of the bearish control zone the hard buy signal and then the cross to the upside. We've got the sell, we've got the buy, we've got the sell, we got the buy. Basically this thing is just slowly moving up, and it's doing so at like these key resistance points. But one thing we're paying attention to is these false signals. When you get basically that hard sell at the bottom of a range, you get the hard buy at the bottom of the range, and then you get the hard sell at the bottom of the range, and then you get the hard buy at the bottom of the range. That's why it's so important to ignore some of these random crosses like this and look for the key, the most important crosses. And you can even turn this off in the settings if you don't want all these extra false signals. You can turn those off and look at only when it's in the bearish control zone, and then you get the hard buy, it will flash, and none of these will flash. And then alternatively, when it's in the bullish control zone, and then you get the hard sell, these will flash. So you have the option to change those around and get less false signals. But if you're doing more like scalps or day trades, it's nice to have like these, or in my case, I don't take hard buys or sells based on these. I use them in conjunction with moving average crosses. So in the event that we get the 8 and 21 crossing to the upside right here, we already have 2 of our 3 signals right here, and then this flips over blue, and then we potentially get up here and enter into the bullish control zone. That's going to be all 3 of these indicators telling us as we get a break of key resistance that we want to be positioned here. So you might lose out on, or I might lose out on 8% of that trade to the upside, but we're looking at 50% move to the upside. So I will easily give up a small percentage gain for confidence in that overall trade and not just getting stopped out. Because if we hit our next 2 targets, our next target is potentially, from a lower low, same target to the upside, or potentially from a lower low, same target to the upside. But as it goes up, it's another 25%. So we're basically just mitigating the extra 20% drops by not just entering into this thing recklessly. But overall, definitely looks decent, but we want to see some more strength out of this, at least the 821 cross to correspond with our indicator oscillators. So, and that just gives you an idea as to like how I'm trading these based on like some of these various combination of like the indicators. Let's go into crypto. I know everybody is very excited to see what's going on here. Bitcoin. Let's talk about Bitcoin. I've been calling out the potential of the bearish divergence here. This to me is really looking like a throw over. We basically come back up to a key resistance after consolidating for week after week after week. We get the hard sell, we get the hard buy at the top of the range, and then we do nothing but sell off since then. Specifically spoke about this indecision candle right here, this doji, and then essentially this looked like it was going to come in and bullishly engulf it, which would have looked good, and that's what I was like, bullishly hoping for. But at this point in time, what does it really look like? It looks like our triple divergence is playing out. I literally said what we need for this triple divergence to print on the chart is we need it to burst up to a new high and then show weakness. What did it do? It bursted up to a new high and showed weakness. So now we have a high, we have a higher high, we have a third higher high. Here we have a high, we have a lower high, we have a third lower high. So we have triple bearish divergence on the daily. Let's look at this one. High, lower high, lower high, triple bearish divergence on the daily. We already had it on CME's triple bearish divergence. So it literally did. We were anticipating this push to the top and then weakness, and that's exactly what happened. Now, granted, we are going into the weekend. So typically the weekends, CME is closed. That's where like your professional traders mostly are trading. And then we have spot markets will be open. That's where like typically like your perma bulls or like, FOMO millionaires are at. So I would expect this to be bullish over the weekend. So depending how this closes, we may see a push up over the weekend, a couple more days, even a new high based on candle closes. But after that, I would expect it to go back to like an actual rational market and see how like price action develops from that. We have quite a few gaps to the downside based on like our futures markets. Does that mean we have to go fill them? No. But are there quite a few signs starting to show up, or that have been showing up, that are just like confirming that we may be topping out here? It definitely looks like it to me, at least for a temporary top and a push back down to some of these key moving averages, which, obviously we've been talking about for quite some time. The retest of the weekly 21, which has slowly been creeping up, but I think anywhere from 38 to like $45,000 is more than likely going to be that target. Once again, we're at the top of the range. We got the cross. We're showing a little bit of strength, but we have a high here on the weekly. We have a lower high so far on the weekly. And then here we have our price action wise. We have a high here on the weekly. And then we're showing now it's 1, 2, 3, 4 weeks in a row of red histograms. So if that doesn't tell you that this market is weakening at new all-time highs at the top of the range, while we're demonstrating clear bearish divergence on the weekly, 3 drives of bearish divergence on the daily, and everybody is more bullish than they've ever been. So I don't know what to tell you. I'm using technicals, not fundamentals, not a magic 8-ball, and this thing looks weak to me. It looks weak. Does it mean we have to just sell off and dump? No. What I would be expecting to happen is basically something along these lines. We could even push up a little higher over the weekend and touch like key levels up here. But in the end, this looks weak to me. It looks weak. We're at the top of range. We're at new all-time highs. We broke out to new all-time highs. We came back down. We are finding support on the previous all-time high. So if we close here in the next few hours, yeah, it looks like we broke out, came back, retested. But then we want to see continuation. We want to see some volume come in. Instead, we're seeing the opposite. When this topped out right here, it sold off. There was like weak volume. It sold off. And then we saw the highest volume being bought up, and then continuation to the downside after that. And then we came up, and we have not seen higher volume since then. So the highest volume we saw was this being bought up before a continuation to the downside, came up to a new high, and then once again, decent amount of volume, but less. So we have less volume the higher up we get, and then once again, sold back off here. When did we see the most volume come in? The most volume was buying volume after the dump, not buying volume at new all-time highs, buying volume after the dump. So it's the same signature here, but weaker. And then now here we are once again breaking out to a new all-time high. And then once again, we see more volume coming in, buy volume as it sells off, followed by continuation, but not on the actual breakout, not to the upside. And now here, if we look at what's happening with our volume, let's draw a trend line from our volume down here across. What does it look like? It looks like we have descending volume while price is ascending. That's bearish divergence between our volume and our price action, saying that essentially this is unsustainable. Price cannot continue to just go up to new all-time highs indefinitely. All it means is that people are hodling, but there's less and less people actually buying. So if there's less sellers and less buyers, but there's more sellers proportionately to the amount, more buyers proportionally to the amount of sellers, price will continue to float up, and then all of a sudden the bearish divergence will play out, and we'll get a massive dump as all of a sudden a bunch of sellers will rush to the market and there's not enough new buyers. But what I would expect to happen is, when this sells off again, when we do get our next dump or our bearish divergence plays out, I would expect the same thing to happen. But what I want to see to tell me that something is legitimately changing is a breakout one direction or the other of this volume trend. So here we have a descending, volume. I want to see a big spike in volume, potentially a new high in volume. If we sell off and then we see a new high in volume down here, I would expect us to go back to new prices potentially. If we break out of this, if we pump up and then we see a new high in volume, maybe we're topping out and that's like a blow off top. But I want to see some kind of like acceleration of volume, because the descending volume, it just tells me that this is unsustainable what's happening right now. So if we're slowly floating up, but it's unsustainable, that would tell us that more likely than not, we're going to be selling off. Also, if we pay attention to what we discussed before, I was specifically talking about, let's take off the moving averages and look at like the overall trend. we basically have been floating up in this trend. Now, depending where you actually draw like support from or resistance from or whatever, you can just sort of like skip the bottom area and just kind of get a rough idea like what's been taking place. This is kind of how I'm looking at the pattern that took place, roughly. And I'm looking for the most sustainable closes. So we had a couple, just to give you like a little bit of an idea why I skip some of the absolute lows. I don't draw it exactly to the bottom. We have basically a clear touch and support here, clear touch and support here, clear touch and support here with a couple wicks under. We have a breakdown, but we're able to save price action and we move back above. So that explains why I didn't draw this literally like, so that it only touches the absolute bottoms. Because if we drew, let's say the green one like this, where it only touches the absolute bottoms, we have one touch here, and then we have one touch here, and no more touches after that. With the blue one, we have like substantial touches here, 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 here. Again, a breakdown, we save price action here, here. So you could see which one is more important. The one where we touch it 2 times, that's giving us almost no useful like information. As we're here, the blue line is very clearly doing something. Something is happening right here at this blue line for it to be continuing to be useful. So what I expect is, just like we said, we were at this top flag pattern right here. We touched the top of it, came back down, touched the bottom, broke down from it, tried to come back up and touch it, found resistance before we got to it, floated up. So again, over the weekend right now, while CME markets are closed, I think there's a high likelihood that we come up here, we push up and get like rejected on either this red line or this blue line. But again, I'm expecting something to happen here where we potentially get one more push up to a new high, hit like that $69,000 to like $76,000 range. Maybe it doesn't happen and the bearish divergence just plays out. But again, statistically, if you look at weekend price action, we typically get bullishness over the weekend and then it will sell off going into Sunday. Or we get a gap up, try to close the gap, and then we get continuation. But again, there's a ton of stuff pointing to potential bearishness. Now, in the event that we do sell off, I will then start really paying attention to, are we going to meet up with this next important line, which is this green line right here, at which point in time I would expect us to come back down to like the $53,000, $54,000 range. And then once again, if we just take like go by like our candle close back here, roughly, we could get another like important line. It's just not right now. It's important, but it's not relevant because look how much price action has to move before we start paying attention to it. So why would we even pay attention to this? I'm going to make it yellow. Pay attention to this yellow line right now when it's so far away. If we break down from the green line below 50,000, I'll pay attention to it. But right now, this is basically irrelevant. But we can toss it up on the chart just so it's there. And then when we do come down and touch it, even if this thing has floated all the way up and we touch it at 60,000, eventually, we'll revert to like the mean, will revert to like that support. It's just a matter of when it happens. So same with moving averages. And oftentimes you'll see like the moving averages will sustain along with like an ascending trend line. So, we're looking for more and more things that line up and tell us something. So once again, that's what I'm paying attention to. You guys know obviously how I feel about Bitcoin. I think we're in an unsustainable trend. It does not mean for a second that we can't all of a sudden see a bunch of volume come in. We can't all of a sudden see these indicators and oscillators break out, invalidate this bearish divergence, and see continuation up to $400,000. But the fact of the matter is that we are not seeing the volume come in. All we're seeing right now is people not sell. We're not seeing a bunch of extra buys. And what we want to see for this trend, for this price action to continue to the upside, we want to see a bunch of new buys and new buyers. This to me looks like we're getting no sells basically, but we're getting enough of the same people buying or a couple new people buying to sustain this trend to the upside. But again, unsustainable over time. Let's do polka dot real quick and then we'll go to Doge because I know that's what everybody wants to see. This one had broke out to a new high, came back down, found support at that key level, which was the previous high. But, it's putting in a lower high right here. If we consolidate here long enough, I do expect us to get that push up to the upside, potentially up to the 1.618 or 1.5, 52 to $54 still looks probable. But, this is what people really want to see. Doggy coin. Look. If you missed out on this, I don't know what to tell you because we literally have been talking about it for weeks, months, whatever. It was in a descending triangle. We literally said as soon as we broke out of this range, we want to see it take out the 6 cents level. If you waited for it to take out the 6 cents level, and the close is at 6 cents, and you bought at 6 cents, or you bought the breakout like we did back here at 5.5 cents, what was our target? First target is 1.618, 14 cents. Next target is the 2.618, which is where we're lingering at right now, 30 cents. Based on round numbers, what was our targets? 10 cents, because 10 cents is even. 50 cents, because 50 cents is even. I mean, what's our next target to the upside? 3.618, 66 cents, or potentially 75 cents. You know, nice round numbers, like, you know, 3/4 of a dollar. And then obviously, you know, $1 or the 4.236 probably would be, I think $1 will probably be a big sell-off. But if we get up to $1 and sustain at $1, I mean, this thing could keep running forever. You know, this, if you got in at 5.5 cents and you rode it up to 30 cents, that's another 6x. So that's my exact point about when you take these trades, you're taking them based on your risk reward probability. So if your risk to the downside was 11%, or let's say you even just bought at the new all-time high over 8 cents, and you know you're still in the trade because you didn't know what to do, your risk to the downside to get taken out of the position, you know, is 25%. Risk to the upside, or reward to the upside, is 287%. So it's a 10 to 1. And this is in a blue sky breakout. So obviously there's no reason to get out of this trade, you know, other than to take profits along the way, or if you have a running stop loss and it takes you out, you know, on its own. So depending on, you know, obviously what your running stop loss is, you know, or where you're taking profits, that's perfectly fine. I always recommend that you take out half your position when it doubles. So, you know, if you bought at 8 cents, you would sell half your position at 16 cents. So if you put $1,000 into Doge and it went from 8 to 16, you now have $2,000. So you take back out your $1,000, you put it back into your trading account or whatever, and then you can let the other $1,000 ride. So then that other $1,000 goes from 16 to 32. Now you have $2,000 again. So maybe you want to sell another half your position. So now you have another $1,000. So you have your original $1,000 back. You have another $1,000 that you can spend on booze, gambling, hookers, your kids, whatever you want to spend it on. You could literally give it to a bum on the street. You could give it to your church. You could do whatever you want with it because it's free money, and then you still have, you know, another $1,000 in Doge at 32 cents. So, you know, if it goes back up to 64 cents, what do? You take another $1,000 in, leave that $1,000 in, you know, whatever. You can be greedy too. You could just leave it all in. That's fine. But me personally, I like to take profits along the way, and I like to put from my speculative positions into my actual, like, bullish fundamental positions. So what do? I take profits out of something like Dogecoin, which I do not actually believe in long term. I don't think Dogecoin is going to change the world. It just so happens that I like crypto and dogs. So to me, Dogecoin is good and it's fun to trade because it's volatile. I take that money and I put it into something I believe in long term, like uranium, like silver, like gold, like Bitcoin, something else. But what I like to do is buy into underperforming assets. So when something like Dogecoin goes parabolic and, you know, 5x's in a couple days, I would like to take that and put it into pot stocks because they've been underperforming for the last couple weeks or months or years. Or silver because it still hasn't taken out its all-time high. Or platinum or uranium or oil. Like whatever you decide you want to put into, base investments on fundamentals, but trades on technicals. So technically, Dogecoin looked very likely like it was going to break out and we were going to make massive gains on it. And technically, we were right. But fundamentally, do I think Dogecoin is actually worth like 50 cents or, you know, $1 or whatever? No, I don't. To me, Dogecoin has no actual fundamental value. People are not using Dogecoin to buy stuff with. People are not hodling Dogecoin, you know, because it's a hedge against the system. You're not going to use your Doges in the future, in my opinion, for anything functional. It's still a meme coin. It's always been a meme coin. It just so happens people like crypto and people like dogs. So that's why Dogecoin is good. But to me, this is 100% a speculative asset meant for trading, not for hodling. But once you're in massive profits or whatever, there's no reason you can't just leave this to die or leave it to moon, you know, and get rich off Dogecoin. I mean, how funny will it be if in the future you can sit around and tell your friends that you became a millionaire because you bought Dogecoin? I mean, call it luck, call it smart investing, call it whatever you want. To me, it's still funny. You know what I mean? I would rather make my money investing in something intelligent than speculating on something like Dogecoin. But it does not mean for 1 second that I'm not going to make money on speculating on something like Dogecoin. So I'll jump over in the comments in a second. I appreciate all you guys for showing up today. Good to see. I can tell these Fridays are popular because I'm getting just as many people paying attention. I tried to do it today going into the close of the stock market rather than going into the open. And as we get closer to the close in the next couple of minutes, we'll switch back over to stocks. So Chainlink, still all-time high, still lingering at like that top area here, just about hitting our measured move. I mean, once again, when we get this close to taking profits on a measured move, I always front run it. I always will front run measure moves. But overall, showing strength on this thing. No reason to think it's not going to keep going. It could very easily come back down and retest and try to find support and get continuation. But you have to be very careful with these things because, once again, I would always rather take profits along the way, than lose out. And if you got into Chainlink on this specific trade, I was about to say when I did, but that was at like $1.60 or between $1.60 and $2.60 is when I was buying this thing. But this specific trade was off the bottom trend line at $24. We made it almost up to a 2x. So once again, you're already looking to sell half your position and take your money back out and then continue to trade this thing, with free money. And that's always how I would look at this. All these cryptos, all these assets, even just like trades in the traditional stock market, whatever it is. I always try to just take half of my money back, half of my profits back when it doubles, and then I have all my money back. My account is still worth the same amount, plus the speculative amount that I still have in that asset, plus, obviously I got my money back so I can trade it or invest it in something intelligent. So, I look at essentially like my fundamental investments as my piggy bank. I look at my trading account as like, my petty cash. So here's Uniswap. Once again, broke out, new all-time high, measured move hit. We didn't quite make it up to 1.236, but we hit our measured move target. 1.618 is still our target. So even if you bought back here and you were way late to the party off the retest of the top, I still think there's a very high likelihood that we're going to get 10% stop loss, 30% move to the upside. So again, even if it's a coin flip and has a 50% chance of playing out, you have 3 times the reward if you're right, and 1/3 the risk if you're wrong. So 10% to 30%, I will take that trade all day. You could have taken it earlier today, and so you can be late to the party on these things and still get action. And again, that's why I put these targets in place well ahead of time, so that you can't be like, well, I wish you would have told us, I would have got in that trade with you. Well, you could do whatever you want. These trades have been set up and posted here for weeks and sometimes months. Same with Dogecoin. People are like, oh, I wish you would have texted me and told me about Doge. Make videos every other day, man. It's not my job to text people and tell them what my trades are or what I'm bullish on or whatever. If you don't have time to watch a video, you don't have time to make 500%. Sorry about your luck. ETH, same thing. We're up here now. The initial measure move was 1.382. We made it to the 1.5. Our target has been for months up here at the 1.5 to 1.6.8 level. I mean, you could say that we already hit it. Do you want to get greedy and ride this up to 27.16? I mean, I don't know. It doesn't even matter right now. If you got in at, $80 to $90 like I did, I mean, who even cares at this point in time? Or $300, or you could have bought in at $1,400, or you could have bought in on the dump on Kraken at, $800 or $1,000. I mean, it's just free money, but you have to understand that this bubble is going to pop eventually. I mean, none of this is sustainable in my opinion. But as far as I'm concerned, Ethereum has still potential to the upside. To our next target, basic attention token. I mean, this is the easiest thing you could ever trade or buy into, because it has strong fundamentals, strong technicals, and when it does sell off, it never actually sells off. It never shows any weakness. 8 and 21 have stayed crossed to the upside the entire time. Target is still, and this is one of my favorite things too, because it's always late to the party. It always moves after everything else does. So once everything else has done these parabolic moves, once Dogecoin has shot up, once everything else is kind of cooling off, then this thing will move. So next time it moves, I expect it up at $2. So even if you haven't bought into this thing yet, still at 1.5, and when I say you, I mean like hypothetically, this is not financial advice. I do not think you should buy any cryptos. I think they're all trash. I think all these markets are going to zero. I think, there's going to be World War III soon, and everybody's going to be eating bugs, and there's going to be no more Walmarts. So don't listen to whatever I say, okay? Which obviously I don't believe that. But BAT, I think, will go up another 30. I think it'll probably go up another 33 to 50% and hit the $2 to $2.20 target very, very soon. And then after that, my next target will be up here at the next key fib level, which will be $5. So if you don't buy at $1.50 or you didn't buy at 25 cents, then you can buy at $2 and you still have another 2.5 X if it continues to the upside. But once again, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Riot blockchain still looks like total trash. Try to break out here. Could not sustain the breakout. Bearish engulfing candle. Coming back down to the bottom of the range. See it back down at the 89 moving average and the horizontal support at $40. Why is this thing so weak when Bitcoin is breaking out to the upside? Because obviously this speaks about this was probably overvalued to begin with, and it's having like a lack of people coming in. But when Bitcoin is breaking to new highs, why isn't this breaking to new highs? Which brings me back to MicroStrategy, Michael Saylor. Why is this not working? Why is this not working? If Michael Saylor is so smart, why is MicroStrategy continuing to make lower highs, continuing to sell off? This looks like total trash. It was way, way too overvalued, way too high of a premium, and probably the only thing that will ever get MicroStrategy back up to its all-time high is if eventually Bitcoin goes full parabolic and the value of Bitcoin doubles or something like that. Because right now, MicroStrategy is down 50% from its all-time high, basically. So in all reality, if Bitcoin doubles in price, fundamentally, you would think MicroStrategy would double in Bitcoin because the company is actually useless. It's just a fake Bitcoin ETF. So, and then Coinbase, trying to put in a bottom here. I mean, this thing has looked like absolute trash since the IPO. It did take out the micro high after putting in a bottom. So now we're starting to see that potential uptrend that we were looking for develop. I'm going to go by Wix just because it works better, but you could kind of do the same thing. Now, do I think this is a good buying opportunity? No, I still think there's probably going to be more downside. The question is, will there be more upside before then? And depending on how you feel about Bitcoin, I'll tell you how I feel about this. So from our bottom right here, we have a slightly higher low. Again, ignoring this wick. Or if you want to go by the wick with the blue, I like to ignore a lot of times when you have a violent move like this to the downside or a violent move to the upside. I like to ignore that massive wick that gets left behind because usually that is like the topping wick. This is like the capitulation, blow off top. And this is essentially the capitulation blow off bottom. So people are capitulating and buying at the top saying, oh, F it, I'll just get into Coinbase because I don't want to miss out. So they're FOMOing in and then it gets a blow off top. The same way it's selling off and people are saying, oh my God, I got to get out of this. It's going to die. And they FOMO out, like capitulate out, and then it gets a blow off bottom. Essentially the same thing, capitulation, wick at the top of a range. Here it's capitulation buying, here it's capitulation selling, but it's the same thing. So if we ignore this wick right here and we go from the closes here, we just want to see it slowly creep up here. But essentially all we're looking for is just sustained higher highs and higher lows for obviously it's a macro downtrend at this point in time. It's a macro uptrend, but since this IPO it's a macro downtrend because we have a high, a low, and then we still haven't taken out the high. So it's an internal retracement. But what we're paying attention to is, are we just going to basically float up here inside this range and then continue to sell off? I think more than likely that's what will happen. But again, we have to look at what happens in correspondence to actual Bitcoin price or crypto in general, I guess. But we have a very clear high right here. So what we want to do is see this come up and take out that high once again, if we start to lose strength right here, it's just going to be bearish divergence between our highs. And once we do that 2 or 3 times, which is what I think is going to happen, I think we'll break back down and continue to see, lower lows. But it is possible, obviously, that we wick back down and find support at the blue right here, at which point in time we can take the green out and we can just pay attention to the blue and the red. But again, you know how I feel about IPOs. I like to buy IPOs once they sell off 40 to 50% from their initial public offering or their initial highs, because people always rush into these things and then they capitulate. So that is Coinbase. I'll finish up there. I'm going to jump over in the comments real quick, see how everybody's doing today. Any logical explanation on Doge? I didn't get on that train, but I don't understand why I would. No, there's no logical. Well, yeah, there is a logical explanation, because people like dogs and people like crypto. Therefore, Doge is the best of two worlds. Because if you like crypto, you got to pick your favorite crypto to invest or speculate in. And if you like animals, you better not be a cat person. I mean, maybe I guess if there's a girl, but statistically there's no girls watching my channel. So I would assume that, you would like dogs. Therefore, logic would tell you that Dogecoin is the best crypto, because dogs are the best and crypto is the best. So therefore, Dogecoin is the best. But no, there's no logical explanation, man. But technically, looking at the Dogecoin, we basically got to an all-time high of 8 cents. We, found support continually and held support for a long enough time that eventually buyers showed back up. And speculation tells you that, matter of fact, this is a good time to talk about Bitcoin dominance. That Bitcoin dominance chart played out perfectly. We hit our target on Bitcoin dominance. And to anybody out there that's screaming about how, Bitcoin is the best and Bitcoin is amazing, why is Bitcoin constantly losing Bitcoin dominance? You have to, at this point in time, argue that Bitcoin is becoming less and less relevant. As more money floods into the space, less of it proportionally is going into Bitcoin. So no matter how fast Bitcoin goes up, it's still losing market cap. So why do people always care so much about market cap, and how a company is so good if it can capture more market cap? Like Tesla is so great because it's going to have this percentage of market cap of electronic vehicles. Microsoft is so great. All these technical things like market cap and percentage of market cap are so important to everyone until it's Bitcoin. And then all of a sudden, nobody cares about market cap. Why is Bitcoin dominance not important? Bitcoin dominance should be important. If Bitcoin was going to be as good in the future as it was in the past, it would be constantly gaining more and more of the overall dominance. So the only two arguments is that Bitcoin is becoming less relevant proportionately, and that eventually something is going to dethrone Bitcoin, or eventually the whole market is just going to dethrone Bitcoin. So even though there won't be one thing that's better than Bitcoin, everything will equally be growing against Bitcoin. So it's saying Bitcoin is weakening in relation to all other cryptos. So you can argue that it's strengthening compared to the dollar or gold or whatever you want, but it's weakening compared to all other cryptos. Therefore, you should not be invested in Bitcoin. You should be invested in all these other cryptos. So, and again, I'm not saying that's my view, but if you're going to use that line of thinking, that's the line of thinking you should do. So when I buy into a company, when I invest in something, I like to invest in the strongest company. I don't like to buy the underperforming company, because I don't want the second best. I want the best, because the best is probably going to stay the best until it's not. So if you're using that rationale, which is the rationale of most investors in a space, I want to own this because it's the best. I don't want to own the second best. I want to own Google because it's the best. I want to own Facebook because it's the best social media. Google because it's the best search engine. I want to own, whatever it is because it's the best and it's probably going to stay the best. Then why isn't Bitcoin the best? Because it's losing market cap proportionately. As money comes in, less of it's coming into Bitcoin. So one of two things is happening. It's either weakening because it's not fundamentally living up to its value, or technically living up to its value, or eventually it's going to get dethroned because something else is going to come along that's better than it. Or maybe just it's complete speculation and there's no rhyme or reason behind any of it. So that's where the whole Bitcoin dominance thing comes into play. So it's basically counterintuitive in my opinion. But again, I think Bitcoin is the strongest crypto because it's actually functional and has it's essentially a fake version of gold, the digital gold, which makes sense because gold is by far the best performing asset, sustainably store of value for the last multiple thousand years. So it makes sense that you would code fake gold, digital gold, and then that would do well. But gold isn't always going to outperform everything in the market like Tesla. Tesla was a better investment. Bitcoin was a better investment. Gold's not always going to be the best investment, but it will be overall the best store of value. So I think in a lot of ways that Bitcoin is actually living up to its new idea that it's digital gold, but it's not living up to its old idea that it's going to be useful for payments. Matter of fact, I used Bitcoin not too long ago to send, not even like thinking, I sent a couple $100 and didn't even pay attention. And it was actually 20% fee to send that Bitcoin. So that's obviously not sustainable because the whole idea of crypto is that it's going to be so cheap to send so much money. Well, if I send $1 million, it probably would have been a small percentage, maybe less than, like Swift or credit card or whatever. But sending only a couple $100, 20%, it's not worth it. There's no reason to use Bitcoin. Maybe you missed something. No, man, it's just speculation. Everyone more bullish than ever. Yeah, the only thing is, like I say about calling tops, man, is like you can't just call a top, because if the top's going to happen once every like 2 years, you're picking a 1 in 700 chance that you call the top. So it's better to just have like trailing stops, in my opinion, or have targets ahead of time and just let them play out. Yeah, Sunday 7 p.m. definitely going to be here for that for sure. What does Doge do? Oh, it does memes. It doesn't do anything, man. It's the same as anything, though. There's the problem with Doge. The reason it can never actually be like valuable is there's an infinite supply of Doge. So it's counterintuitive that it could ever be valuable. So the idea of why Doge is going up right now, the reason Doge is going up right now, one, it's available in a lot of places. Like you can buy Doge in a lot of places like Robinhood. It's also very popular. People have heard of it because it's had like more gains than just about anything else this year. And then like obviously you can get it on just about any other actual crypto exchange. And then on top of that, like, it's just one of those things where as long as there's more buyers than sellers, price goes up. And people like to chase the fastest horse in the race. So the fastest horse in this entire bull run, is almost undeniably, I'm sure something has performed better than Dogecoin, but I honestly doubt it. I mean, I remember buying Dogecoin for a penny and just being like, let me just throw a bunch of money in Dogecoin and just wait. And then when it has its parabolic run up, I'll sell. And then what happens every time? It goes back down to a penny eventually. This time, maybe it doesn't go back to a penny. This time, maybe it goes back down and it finds support at 2 pennies. I don't know. Maybe it doesn't ever go down again. But the fact of the matter is, more than likely, it's going to crash eventually. Nice to catch you live. Yeah, I'm glad to have you, man. Good to see you, Aaron. Take a look at, what is that? RLC and Bitcoin USDT on Binance. I mean, Bitcoin to USDT is the same as Bitcoin to USD. I'm not sure what you're asking for, but yeah, we can look at RLC. Just give me 1 sec. I'm assuming because you asked about Binance. Oh, wait, do you want to see RLC to Bitcoin and RLC to USDT? Is that what you're asking? That actually makes sense. I will look at it to Tether, and then we can take a look. I mean, I think probably any crypto right now, just because Bitcoin is losing Bitcoin dominance right now, I think any crypto traded against Bitcoin is going to look like it's going up. But to tell you the truth, I always like to chart a strong asset against a weak asset. So when crypto is in an overall uptrend, I don't like to chart against other cryptos. I like to chart against the dollars because I would rather chart strong to weak. So like in this case, any crypto against the dollar is going to be a better looking chart and give you a more accurate representation. But if you're wondering, like, should you be in RLC or should you be in Bitcoin, without even looking at RLC to Bitcoin, I'm assuming based on Bitcoin being in an overall downtrend in comparison to the remainder of the crypto space, that you're better off having RLC than Bitcoin. Solid disclaimer. Thanks, Kay. No more Walmarts? What a hellish world will we be living in? Yeah, I'm just kidding, man. Uh, I mean, really, like Target's the new Walmart anyway. Like, why not just keep it classy? With all this crypto money, we don't need to shop at Walmart anymore. We can all shop at Target, especially if you're single, because that's where all the women go to avoid all the. I don't know. I like the People of Walmart website. I don't know if anybody's ever looked at that before. They like show like it's like people in their pajamas or like in a speedo, like an old man in a speedo, or like it's always like the funniest stuff, man. People of Walmart. I love my favorite thing about Walmart is that they have like their like shaving razors like chained up like the vault at like the freaking bank like protecting their gold. I think like that's hilarious that that's like the most valuable thing that they have. Like, but back in the day it was like CDs and DVDs. Now it's like razors. I'm like, you would think if you were like struggling that hard that you had to like steal stuff that you would like probably just not even worry about shaving. But apparently, like those two things don't correspond. Like if you're poor, you still want to shave. So I think that's like hilarious. Or I guess you don't have to be poor to steal, but theoretically, for it to be worth it, I mean, you would have to like give up on the law before it would be worth stealing. So RLC to USDT. I mean, let me switch. I don't know why it pulled up it pulled up the 15-minute because of Coinbase. Oh my God. What is that? What is that thing? Imagine if you had a buy order in, let's not even say at the bottom. Imagine if you had a buy order in at a penny. I mean, that's absolutely nuts. Anyway, making all-time highs. So that's obviously good. Very bullish in comparison to a lot of other cryptos that are just now or still not making all-time highs. Overall, it's had a couple 821 crosses, but it's been finding support at the 89 along the way. You would have got bullish on the daily, basically back here at, I would say probably about $1. And since then, it has basically tripled. You're not quite at the all-time high right now, but you found support and kept the 821 cross to the upside. Still looks bullish to me. If we look at the indicator oscillator, you have a high right here and then a slightly higher high. So you basically were trying to potentially print like you printed some bearish divergence based on wicks, but honestly, like, it was basically invalidated here. So you could argue that there's potentially some divergence developing, but I would be paying more attention to something like this. Basically like an ascending wedge. You have a wedge like just getting tighter and tighter. Let me get rid of the moving averages real quick. You have this wedge basically getting tighter and tighter, but price is floating up. So, right now you want to be in this thing while it's floating up. But in the event that it breaks down, now it could easily break to the upside. Wedge does not, ascending wedge does not always break to the downside, but typically, more often than not, this is a bearish pattern. So like, eventually you'll float up, float up, float up. And then when you lose support on the bottom of this wedge, which even if we came down to it right now in one single candle, it's at like $2.40. But assuming we just continue oscillating, when you lose that wedge is when you got to be worried. And the measured move of that wedge breaking down would take out that previous low. So that's going to tell you two things. One, that we're no longer making higher lows. And two, we've lost like our key pattern. But in all reality, there's a couple things that you'd be paying attention to. Pay attention to like that previous high level back here. That's a key area of support, which corresponds with the same thing. If we take out that low and then we also break down from it, I would be looking at the trend as potentially like turning around. But in all reality, I mean, you could draw this thing all the way back to here. You could look at it as something closer to that and, it bounced it. I mean, this overall, there's no reason to think that this looks bearish. But at the same time, this is an overall bearish pattern in a macro bullish uptrend. So even if you take away like the probability of the pattern and just say it's going to be a 50-50, there's nothing telling you right now that you don't want to be in this thing right now. And just without even looking at the chart to Bitcoin, I'm going to tell you right now that, everything basically, every other crypto looks better than Bitcoin right now because Bitcoin is losing market cap with the exception of like a couple things like that are not making all-time highs. Like XRP is not making an all-time high. Litecoin is not making an all-time high. A lot of like the big performers back in the 2017 bull run are not making all-time highs. And what that tells me is that there's new, better, shinier things, or things that actually serve a function. Because if you're not making an all-time high in crypto markets right now, like I'm probably never going to be interested in you again. You know, Bitcoin Cash, Satoshi's Vision, like there's tons of these things. And in my opinion, imagine if you were in XRP and you just held through this whole bull run. And yeah, great. Maybe you got into XRP, you know, at 25 cents. Maybe you got in at $3. Maybe you got in at $1.50. Maybe you're dollar costing in at $1. But you haven't even doubled your investment yet. You know, same with Litecoin. Maybe you're in Litecoin from $200 and you're like, oh, thank God, I'm finally up 50%. Meanwhile, all these other things are like 10xing, 100xing, like 20xing. Like, I mean, that sucks, dude. That totally sucks. So, in my opinion, I'm always all about that fastest horse in the race. But, you know, sometimes you're upside down in a position. In my opinion, though, if you're upside down in a position for an entire bull run, the first chance you have to get out of that and get into something strong makes sense to me. So, but again, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Dogecoin is obviously the best crypto. If you're not in Dogecoin, I mean, I sold my house and bought Dogecoin. So I obviously did not do that. I'm just joking, but it's funny when I hear people saying that stuff. I took out a second mortgage on my house and bought Dogecoin. Well, that's like going to the casino and mortgaging your house and betting on, you know, 32. Like, it cracks me up. On one today. Yeah, you know I like to play around, man. It's the weekend. We're about to have some fun, Commander Corn. I mean, I always have fun, so especially in bull runs. Can I look at Binance? Oh, BNB coin? Yeah, for sure, man. Yeah, I think BNB coin went up like 100% this week. That's one of the few cryptos that I actually wish I made. Probably the only crypto I wish I made a Binance account for. Because I've been charting it forever and it's only really just been crushing for like this whole entire bull run. I've been telling everybody about how good it is, but I just never got around to making a Binance account. And I know they have like Binance USA. I could have just made one of those, but I just honestly never did, which is fine. I mean, I'm okay with that. There's plenty of other stuff that you can trade. But I mean, Binance is essentially, you know, when it topped out back here, we fibbed from the top to the bottom right here. And, you know, exactly what we said the whole time is we had that descending, you know, pattern or that flag pattern playing out. As soon as we saved the 821 cross right here, as soon as we took out the high at 292 or the all-time high up here at like 350, what happened? We shot up, we shot up to the 1.618. Overshot the 1.618, and now here we're finding support. We did flip over the parabolic SAR red right here. We are showing a little bit of weakness. We did get the hard sell, but we have not exited the bullish control zone. This looks like it actually might be topping out because it looks like we're about to leave the bullish control zone. We made it up to the 1.618 and then got basically like a throw over and have been only showing weakness since then. But if it keeps running, BNB is going to be at $1,000, so it's still another 2x from here. But if it sells off, you know, very likely going to retest the breakout key support back here at like 330. So as far as I'm concerned right now, you know, if you look at just that most basic principle that it either travels to the 2.618 fib or it breaks back down to the previous level, what's your risk reward going to look like? It's going to be like even to the upside and downside almost. It's not tradable to me right now. I take it back. It is actually tradable to me right now because it would be a 32% pullback from where we're at right now, you know, back to the previous high, or a 91% pull, you know, to the upside. So that's still like a 3-to-1 risk reward. Now, I wouldn't want to put a hard stop in right at the top. I would want to run a soft stop on this and say, okay, if it starts closing below the previous all-time high, I don't want to be in this trade anymore. But again, I also don't want to be involved in a 31% drawdown either. But you know, it's still risk reward rise, risk 31% to make 91%. You know, that's 3-to-1. So even if it's 50% up, 50% down, you know, if we flip that coin 100 times and you make $3 if you win and lose $1 if you lose, flip that coin 100 times, and in the end, you're going to be up massively. So could you take this trade, with a small portion of your account and still be profitable more than 50% of the time? Damn well could. Yes, sir. But I don't like taking massive drawdowns on stuff. I mean, but again, there's no reason to think BNB is not going to just keep crushing it. But in my opinion, as we're getting ready to exit this bullish control zone, we could very easily get a situation like this where it starts to break down, find support, and then continues to the upside, like exactly what took place right here. But if it exits the bullish control zone, I would just wait and see. Does it exit the bullish control zone? If it doesn't, it's probably going to have another leg up and hit $1,000. If it does exit the bullish control zone, it's probably going to retest the previous all-time high of $350. But overall, I've been bullish on BNB this entire bull run. BNB was one of the first things we talked about. I remember this thing back at $17. I remember back at $30. People were saying, should I get out of my BNB coin? And I said, look, this thing has been an overperformer already in comparison to anything else. I probably wouldn't sell any BNB. And it's been the same way. There's a couple cryptos like that. BNB has been one of them. Doge technically has been one of them. What was the other one? Chainlink has been one of them. There's no reason to sell it. It's been absolutely crushing. Commander Corn says, I think the crypto space is mature enough that Bitcoin can be the best at what it does, but it can't be everything. I mean, what is it the best at, though, is the real question. What is Bitcoin the best at? It's the best at not having a hyperinflationary supply like most of the other cryptos, but it's not actually the best at anything. Comparing Microsoft to Amazon just because they're both tech. I mean, you could argue that it's the best store of value. And, because we have such a young market, most of these cryptos didn't exist 4 years ago. So if you compare them to Bitcoin, you have only 4-year time frame. So you only have one bull market to compare them in. But my point is that you look at an entire space. You look at a sector, you look at the tech sector and say, what's the top performing in the tech sector? But yeah, you could also look at the tech sector as a whole and then say, what's the best search engine? What's the best social media? What's the best? You know what I mean? So it's like, how far are you going to break it down to? So, obviously Bitcoin is in many ways like the gold of cryptos. It's the store of value of cryptos. But I mean, in my opinion, you should always diversify your portfolio, not just between different sectors, but in different parts of the sector. No, I hate Coinbase, Brandy. I think Coinbase sucks. But, I'm biased because I've been around for a long time and I've seen how they've jacked up their prices. They've screwed their customers on many different times. I was using Coinbase when you could only get, Bitcoin, ETH. What else was it? Roger Ver coin. And what was the other one? Man, I can't even remember. Jeez, I can't even remember what was around back then. But no, I hate it. I mean, they jacked up their rates, which I did actually look at their trading fees, and they did. It is capped, I think, at 0.5 on Coinbase Pro. But I think probably most people are just using regular Coinbase. People at Walmart is hilarious too, man. It's so funny. And I live in the South too, so I don't even have to go on the actual People at Walmart site. I can just go to Walmart. Yeah, they're so great. What are those? Yeah, that's exactly what it is too, man. I'm like, I can't even take my phone out in Walmart because I'll just be taping people. And I try not to be rude. Thinking from one, fundamentals look nice. Yeah, Aaron, definitely. Yeah, always hodl a small amount, man. Take your initial investment out in gains and then actually invest that in something that you're fundamentally bullish on, like put it into your quote unquote savings account and then speculate with part of your thing. And every time it doubles, pull a little more out, or don't, because you're already in a free position. So who cares at that point in time? But me personally, I like to always just take some profits. As things go up, I like to regularly take profits. I do not ever look at something as I missed out on more potential gains. I look at it the other way. I locked in profits. So now they're, my quote that I always say is, profits aren't real until they're realized. Because you can be rich on paper, but until you're actually out buying a car or paying off your house or paying off your credit cards or, gambling or whatever you're spending that money on, your family, your kids, your car, your house, whatever, buying actual food with it, it's just numbers on a screen. Profits aren't real until they're realized. Notes from today's video. Crypto Trend Trader says to mortgage a house and put half on Doge, long the other half on number 32 at the roulette table. Got it. Yep. And if you double your money, man, make sure that you send some crypto down below. And if you lose everything, I don't know you. I mean, technically though, that is a safe bet. Historically, based on this bull run, if you mortgaged your house and put everything on Doge, you'd have 30 houses right now, or like 1,000 houses right now. So, but again, it's not financial advice unless you're right. And then make sure you remember your boy. We need 1,000x your house payment. All right, so let's look at some real assets again. Markets are closed too, so we can take a look at the closes. I want to specifically look at Pinterest because I literally told you exactly what was going to happen on Pinterest, and I want to talk about that again. And it was literally based on one candle. One candle told me that. But let's look at commodities first. Hang on, I got to clear my throat real quick and grab a drink. Getting a little raspy. Much better. All right, so gold. Gold doing exactly what we said. Man, I've got to be the luckiest analyst in the space. I mean, it is unbelievable how lucky I get. Because look at what happened with gold. We told you at the exact bottom, we expected to move to the heart line or potentially to the top. And now here we are at the exact top. So let's see what happens. Historically, we touched it once, touched it twice, touched it 3, 4, 5, 6, 7, 8, and now here's our 9th or so time. Could we get another throw over like this? It's definitely possible. Could we get a breakout, confirmation, continuation? It's definitely possible. Or more likely, based on the amount of times it's happened so far, this is where we'll get rejected. So I will be paying attention now. And then obviously that comes into line with this white support line here. I will be paying attention now very closely to what's happening in gold. Because as far as I'm concerned, this wasn't really a tradable range. It was a $100 move on a $1,600, $1,700 asset. It's not worth trading when there's so many other things just moving massively, But in all reality, am I a long-term buyer of gold, a hodler of gold, an investor in gold? Yes, that's part of my savings account. So, but physical. But realistically, what do I expect to happen? I expect it to sell back off. The next question is, does it sell back off and find support at or above 1680 and then eventually break out? Only time will tell. And what do you think? Silver does the exact same thing? You think silver got rejected at, the resistance that we have already drawn on the chart? I don't know, but if I had a guess, oh, look, it did. Silver got rejected at our dotted heart line of the channel, as well as our descending red trend line. Once again, does that mean that it's just going to go down now? No, but we have to see it break out. Could it get a breakout failed? Same thing that happened with gold, 100%. Could it make it back up to $30? 100%. More than likely, though, in my opinion, it would be down at $24 or at the bottom of the range down at $22.50. So once again, silver is much more tradable because of its volatility, but if you're trading paper silver, you could have traded and made 10% if you bought the bottom and sold the top. But again, I'm waiting for a legitimate range break with gold and silver just because they really don't move that much until they move. So, but we are seeing a lot of bullish stuff start to show up in gold and silver. We looked at this one last time, and this is really what I'm paying attention to also. The breakout on the gold silver ratio is very, very important to me right now. We have been, since last year in March, in a descending, basically a descending tightening wedge. All right. So we're getting lower and lower highs. We're getting lower and lower lows, but we're pinching into this position. And that tells us that basically silver is gaining against gold since that time when it topped out at 130. It's been gaining against gold. Now it has broken out of that range. And what I expect to happen is, it's finding support exactly where I expected. And then I expect eventually it could potentially sell back off down to 65. It could sell back off and retest the breakout and even put in a lower low. But in all reality, I expect it to get a measure move back up. I expect it to get a move back up somewhere to like the 90 to 1 range. So I expect gold to strengthen against silver or silver to weaken against gold. So what does that mean? Either gold is going up, but silver is going up. Gold is going up fast and silver is going up, but less fast. Gold is going down, but silver is going down faster. Or gold is going up and silver is going down. It could be any one of those situations, any one of those three situations. And that's why gold-silver ratio is important, because it can be an up situation for both. It could be a down situation for both, or it could be an up situation for gold and a down situation for silver. Any one can give us the result on the chart that we're expecting. So platinum, another absolute beauty. Still paying attention to platinum, still looking bullish, but are we going to get one more pushback down and a potential like fake out breakout of the channel followed by continuation? Probably. We are showing quite a bit of weakness in platinum while it just goes sideways. But again, that can be a bullish reset. We got the hard sell signal and then it's just went sideways. We have a bunch of red histograms in a row. It's just went sideways. So could all of a sudden it capitulate down and hit our 4 target? I think that's very likely. But in the end, I expect platinum up over $2,000 for this wave 5. So, that's maybe somewhere where I'm taking some of my gains out of crypto and putting them into a hard metal. Because I don't know if you've ever bought platinum before or seen it in real life. It's pretty freaking cool. It's shiny and it just looks awesome. So why not own some physical platinum? Copper futures, exactly what we were talking about. Finding strength, closing at the all-time high. Still got 47 minutes left on this weekly close here. But, it's basically consolidating at the top of the range. So I expect continuation. I expect copper to go much, much higher. On the weekly, we got bullish on copper right back here. So, and when I talk about a weekly chart and we're talking about being bullish on, when we're talking about getting bullish on something on a weekly chart, we're talking about probably years in price action to the upside. So that's where we get bullish on copper. Basically somewhere in like the $2.50 to $3 range, $2.75, let's say. And it's still up substantially since then. Where do I expect copper to be at in the future? I think copper will easily get to $8 or $13. What does that mean though? Does that mean copper is more valuable or dollars are just worth nothing? I don't know. But in the end, I think copper is going into a massive, massive bull run. And if you believe in infrastructure, if you believe in, clean energy, copper is by far the best bet. Speaking of infrastructure and clean energy, uranium. I think uranium is a massively bullish bet, but right now uranium looks very likely like it is at least temporarily topping out. I've been saying that since back here. I told you I expected us to get a higher close, but potentially still just topping out. And now it looks like we're about to lose the 821. Looks like we're about to sell off. This is actually UEC, which is a miner, not like actual yellow cake uranium. It's not like that uranium that you can like put in your pocket. Obviously you can't do that. I was just joking, but this is one of my miners. I think it still has downside. I think it's very likely, looking at the daily, I think we're going to get a good opportunity to buy this at about $2 again. But anywhere from like 260, basically, this thing looks good to me regardless. Even if it has a pullback, I don't think it's going to have a massive pullback. But the exponential gains that this offers in comparison to the little bit of risk that uranium offers makes this probably one of my strongest conviction trades or investments over like the next like 3 to 20 years, probably closer to 10 to 20 years, because everything is so slow in the uranium space. I mean, a lot of nuclear reactors, they take like 10 to 20 years and hundreds of billions of dollars. And essentially uranium, you have to look at it as a strange situation because we actually had a massive surplus of uranium for the last like 5 to 10 years just sitting around, and we've slowly been burning through it. And then last year we used 50% more uranium. The world used 50% more uranium than the world mined. So what does that mean? It means we still have a surplus, but we're eating into that surplus at an exponential rate. So when these new, nuclear power plants come online, we're going to use that surplus up even faster, and we're already using it up exponentially fast. So all of a sudden, we're going to say, oh man, we're using more uranium than we're making. Something has to change. So all of a sudden, all these uranium mines have to come back online, or that would obviously be supply increasing because uranium mines come back online. Well, in order for that to happen, price has to go up. So more than likely, both those things will happen. Price will go up, which will cause more rushing into uranium, which will cause price to go up further, which will cause uranium mines to come back online, which will cause price to go down slightly because supply goes up. But in all reality, I would expect price to just go up parabolic as, these mines come back online, or people start getting, start mining again, building new nuclear power plants. All this stuff happens so slowly that the ramp up will happen, and then this thing will just go exponential. So this is URA. This is one of the ETFs. It's not the best ETF just because when uranium was getting crushed, they diversified. I think it's only about, at one point in time, this was down to like 50% actual uranium stocks or miners. Now I think it's closer to 75%. There's a couple other ones that I'm also interested in or trading or investing in. But overall, I think you'll do fine in any of these. But like they got into like a little bit of diversification into some of the other like stuff in the space. But like URA, URNM, Yellow Cake, or Cake. There's a couple other ones. URNM is one of the other ones that I'm invested in. But again, just to give you an overall look at the space more than anything, you can obviously do your own research. Cameco is another one. We got bullish back on Cameco at like $10. It's up to 16 now. It's got the cross down. Potentially going to sell off back down to the 89, the 200, one of these key fib levels. Still definitely going to be some time. I mean, a lot of these things have moved already, and people are like, oh, it already moved so much. I really don't want to get into it right now. Don't get into it right now, but make sure you keep it on the radar. Because again, this thing can sell off, lose 50% of its value and then go up 20x. So, what's more important, timing the market or time in the market? It depends on what you're looking for. You know what I mean? Are you looking for an investment or a speculation? Interesting data about old nuke plants being renewed into 2025 and Japan's extra uranium supply running out, et cetera, et cetera. Yes, sir. Those are two very important things. The amount of time it takes for a uranium mine to get back, like come back online. Like Cameco has a couple of like the biggest uranium mines in the United States. And like if you start paying attention to them, like they're flooded. So like all of a sudden uranium price spikes up to $100, let's say hypothetically. You don't just say, okay, let's start mining uranium again. Let's open back up. You got to get workers. You have to drain thousands and hundreds and thousands of gallons of water out of these mines. You have to there's so much time, effort, and money that has to go back into these things to start, mining again. And then on top of that, you look at the actual nuclear power plants. Most of the nuclear power plants that are being built right now, and there's a lot of them, are none being built in the United States, but all over the world, other places, Japan, China, all over Asia, India. These things take like hundreds of billions of dollars and a decade. So if all of a sudden the USA says, hang on, man, nuclear power is actually good we should stop like this weird stigma about it being bad, because so much has changed since then. And if you look at the actual like 3 events that we've had that make everybody hate nuclear power and nuclear energy, like they really weren't that bad in relation to like the pollution that comes from oil, or, you know, the amount of people that die from this, that, and the other in, you know, coal mines, or, you know, whatever you compare it to, like in relation is like not bad. But it has this horrible stigma because when it does go bad, it goes real bad and makes like big explosions and like, you know, front page news. You know, if the United States all of a sudden says, wait a minute, if we're not going to be using oil, or we're not going to be producing oil, or we're not going to be a net positive producer of oil because Biden and a bunch of like hippie libs, no offense if you're one of them, doesn't want to use dirty coal, energy, oil anymore because we want solar and we want renewable. Well, how are you going to build all these solar panels? Probably using like diesel equipment, probably manufacturing them by burning oil. How are you going to build windmills? How are you going to make the steel for the windmills? How are you going to, you know, build dams for hydropower? How are you going to do all this stuff? Well, you're going to have to use actual energy that we have now to build the energy of the future, to then use renewable energy. So in order to actually build infrastructure, we need to use oil. So does it make sense to stop being oil positive producer and all of a sudden be like, we're not doing this anymore, we're just going to buy expensive oil from other people because the US doesn't want to pollute, even though we're just going to buy from other people that are polluting? So that way we feel good about ourselves, but we don't have a net positive on the environment. That makes no sense to me. That's the stupidest thing I've ever heard. That's like the same thing as saying we don't want to underpay people. We want to have $15 minimum wage in the United States because we're good people and we want to support our workers and we're good. And then what happens? We pay slaves in China to build the stuff. So we lose the jobs. We encourage slavery, but also everybody gets a minimum of $15 an hour. But those people just don't get hired because they're not worth $15 an hour. So net negative jobs, net positive supporting slavery, and you know, it's all the same because we didn't actually stop using oil as a country. We just buy it from somebody else. So it's like we feel good about it because we're not the ones doing bad, but the bad is still getting done. It's just getting done by someone else. And then in the meantime, we'll just turn into a welfare state because we lose net millions of jobs. So, but again, don't get me started on a tangent, which is basically what happened. AG, First Majestic. I mean, I still think it has further downside until it shows us some love. But if silver starts breaking out to the upside right here, maybe this develops into a head and shoulders. Definitely looks like we have an inverted head and shoulders starting to show up in the chart here. You know, we got a shoulder right here, neckline, head, neckline, you know, shoulder maybe comes down a little lower. Maybe it's an underperforming right shoulder and we get a burst to the upside. You know, if we do, where are we going to go? Probably to retest the all-time highs. Maybe even just to fill this gap and then put in a lower high. So could we shoot up to $22? Yep. Could we easily sell back off to like $13 to $14? Yep. And that's an entry point for me. But realistically, we already hit that target. So again, though, you know, I show you these because these are things I'm invested in, or I'm looking to further invest in, or I'm looking to invest in, or someone asked for it. But if I continually show it to you, it means I'm probably invested or interested in investing in it, or both. USAS, American Gold and Silver Corporation. If you're not sure if you like gold or silver, why not both? You know, again, we've hit my target area down here, the 0.5 Fibonacci, the 382 of the entire macro move. This thing's showing quite a bit of weakness, still under the 200 exponential and simple, starting to roll over. This chart looks a lot like gold's chart. Almost exactly like gold's chart, like in the shorter term over like this last year. But could we further have downside? Yep. Could we easily have upside? Yep. But to me, it looks like we're just putting in a series of lower lows and lower highs, and we're getting rejected at a key resistance. We could easily burst up to like $2.40. But I think, you know, until this shows us something different, I think we more than likely have further downside, you know, over further upside. But again, if it changes around, this thing will probably go parabolic. And that's what these miners are all about. They're basically just like the equivalents of a quote unquote leverage position on the underlying asset. So Caterpillar, still massively bullish. Brings me back to my argument about having to use diesel, oil, coal to build infrastructure, to build clean energy, to build roads, to put in copper pipes, to, build whatever we're going to build. Who's going to do it? Caterpillar. You want to talk about American made, American built, support America, buy America, all that stuff? Caterpillar. So what's one of the best charts? Percentage wise, yeah, you're not going to probably get rich off Caterpillar, but you want to talk about a store of value. You want to talk about an appreciating asset. Probably Caterpillar is a good investment, in my opinion, because, this is one of, the oldest charts that we can look at. This one goes back here to 1968. And what has Caterpillar been doing since 1968? Been getting juicier and juicier. Looks great. Short-term time frame, though, we got to be careful on this bad boy. I'm obviously very fundamentally and technically bullish on this, but we do need to be careful because we have a high here, we have a lower high here, we have a lower high here, potentially a lower high here again. We have a high here, we have a high here, we have a high here, and then same high for now, potentially even higher high. So we got to look out for that bearish divergence. If it sells off, where's it going to go? Probably just to one of these key levels. Again, you're not going to get wrecked and lose 50% of your value in Caterpillar, more likely than not. But, any sell-off, any substantial sell-off, I'm looking at key levels, key fib levels, or key moving averages to just further increase my position on Caterpillar. I look at this the same way I look at gold. Caterpillar to me is a savings account because the only way, in my opinion, Caterpillar does bad is if all of a sudden new technology just dethrones diesel equipment, which that's not going to happen overnight. A new company comes out and starts doing it better, which nobody's been doing that for the last 50 years, so I don't expect it to happen anytime soon. Or maybe the entire economy completely crashes and nobody builds anything and no money gets spent on infrastructure and no money gets spent on mining, no money gets spent on anything, in which case, everything else is probably dead or dying, and Caterpillar will probably take a hit as well, but it will probably take much less of a hit. The same way gold takes a hit during the capitulation a year ago, but it takes much less of a hit. So, which takes me to green, not that green energy, that green smoke, Tilray. Like I said, I'm looking to buy this. I am buying this actually, off of the 200 exponential moving average. We could very easily come back down. We're at $17 right now post market. We could very easily come down to $12.63. That's a massive dump. But, we were just at $68 on this thing. And you guys know my target on Tilray. Just to retest the previous all-time high, my target's $300. But in all reality, I expect this thing to go to $1,000. I think Tilray will be the trade of the century. It'll be like the Doge coin of the cannabis space. I love that we're comparing anything to Dogecoin in a good way. Aurora, one of the weakest cannabis stocks. Still, to me, looks like we're developing a massive inverted head and shoulders. This thing's definitely got some potential back to the upside. Again, it's one of the weaker ones in the space. It could easily have further downside, but full disclosure, I purchased some more Aurora this week. Same with Tilray. Same with some of the overall ETFs. THCX. There's a couple of them. Canopy Growth. I like to have the underlying because I pay attention to specific charts, but I also like to not have, okay, if you own just ACB and you were in the ACB cult, you had to watch Tilray crush it and you missed out on all that, or Canopy Growth or whatever. If you just have some of this and some of the other one and maybe some of an ETF, no matter what, you at least get a piece of the pie. So I prefer to diversify even within a space. Canopy, got to be careful on this one. Definitely could still have more downside, but overall we're starting to see some bullish signs. We're basically developing bullish divergence here, which is what I was talking about. I expected this to develop bullish divergence. Very clearly developing bullish divergence on both of our indicator oscillators. And it's bullish obviously because we sold off much lower, but the indicator oscillators came down to the same level or slightly higher levels. So when this thing does get a burst, if we just take a simple Fibonacci retracement from the high, assume you know, just for this exact example that we did put in our low right here, even if we get a 50% move up here, so if we shoot up from 28 bucks to 38 bucks, you know, that's basically a 33% gain. So, you know, if we just put in like a simple long position from, you know, where we're at right now off the 200 moving averages, and we say, okay, we're going to take a 50% retracement to a new lower high, but we're going to take, you know, if we break down below basically the 200 simple moving average and sustain for long enough, that's potential loss of 10.7%, potential gain of 41.45%. That's a, you know, basically 4-to-1 risk reward ratio. So you take this same type of trade enough times and you flip a coin, you're going to make money. And that's how I look at it. Again, not financial advice. I'm not your financial advisor. Drugs are bad. Investing good. Diversification good. Lemonade, same thing. Still showing weakness. Broke down from a key level. I still expect this thing to go down to 53 bucks. So get ready to lose. If you didn't sell from the top, or you bought at the top, or you didn't sell the cross back here at the 821, where I told you I would sell the cross if I were invested in this, you're down 53% right now. So you're getting absolutely decimated if you didn't take profits. I would expect you to be down 72% very soon. If you're buying right now and it goes down to where I still think it's going down to, I would expect you to lose 40% of your money. And fundamentally and technically, I'm not bullish on this thing at all. If we come down here and retest the IPO on this, I think it probably dumps and sells off lower. So I'm not convinced that this thing has any legitimate potential. So that was our commodities. So let's check out tech. And this is perfect for our weekly wrap up too. Yeah, that's pretty much it. Stock market closed for the week. Tesla made it back up exactly to our target. Our target was between the 618 and the 786. Go figure. This has been in place for some time and we hit it exactly. We're now showing weakness, getting rejected at the weekly close below the 618 key Fibonacci level. So what do I expect to happen? I expect further downside, back down to put in another higher low. So I would expect it to find support at either the 382 or the blue parabolic ascending trend line. So 662. Is there a possibility Tesla comes down and puts in a new low? Yep, I definitely think it does. I think right now that was our A wave down. We got a B wave up and we're getting a C wave down. Or maybe this is all part of the A wave. I still think Tesla is going lower. I still think the stock market in general is going lower, but I'm not calling the top. But if something's already topped out and it's showing weakness, I sure will call that. NEO, you know, I'm bullish on this in the long term, but it looks like crap. You know, putting in lower highs consistently, still in that descending triangle. Told you here, I expected it to go back down to the bottom of the range. Told you here, I expected it to go down to the bottom of the range. And now here we are at the bottom of the range, you know, finding support at that green trend line. This is obviously a bearish pattern. The longer and more times we hit this bottom right here, we're just eating through those buy orders. We come down here, find support on the 200 exponential, come down, test it again, and we buy, and now half the buy orders are gone. Come back up here, put in a lower high. People are selling into this weakness and then come down again. Now 3/4 of the buy orders are gone. So if we bounce up here again and come back down to it again, what's going to happen? The bouncing ball bounces less each time, and then finally it rolls off the table and we get the waterfall effect, at which point in time this thing could get absolutely crushed. You know, if you didn't take profits back here when I did at the cross at $57, you know, you are down substantially on NEO right now. Let's remember this thing was like bankrupt and at $4 a year ago. So 39% down from there. If it continues to sell off to our measured move targets or key Fibonacci levels, we're looking at anywhere from like, you know, 60 to 70%. If you take the buy right now at support in a bearish pattern and you're wrong, you're looking at another 30 to 50% to the downside. The risk reward on this is not good right now because you're basically buying the middle of the range and a bearish pattern. I think more than likely this thing presents an amazing buying opportunity close to like 17 or 18 bucks. Now, do you have to get greedy and wait for 17 or 18 bucks? No, but I mean, I would rather buy into strength than try and pick the bottom on this thing. But, you know, in all reality, if it capitulates down here and hits that target, I don't think it's just going to get like straight up like wrecked. But in all reality, I mean, you know, if you're wrong, it's still a 2-to-1 trade, but you're not probably selling out of this at the 382. You're probably buying more. Or I'm sorry, at the 0.5, you're probably buying more. But I think this thing is still going to be going down. It's showing no strength. 821 are still across the downside. You know, Chinese stocks, stock market, real estate are all showing a ton of weakness right now. There's a high likelihood that the China bubble is popping, ready to pop, or the precursor to the whole world bubble popping. I talked about this a little bit. Helion is now below its initial public offering IPO levels from last year. This is free fall right now. This is the opposite of blue sky breakout. Blue sky breakout, you're at all-time highs. You continue to make all-time highs. This thing is at all-time highs. Lows, I'm sorry. I would expect it to continue making all-time lows. I think there's a good possibility this thing goes, it's at $9 now. Once it lost that 952 range, I think there's a good possibility this thing goes to like $5 or $0. But again, you know, the exponential upside potential for this in 10 years looks great to me, the idea of it, but will it last? Probably not. But at under $10, at under $5, is somebody going to come along and probably buy it out, buy its patents, buy the idea? Maybe. But again, until it shows any strength, I have no interest in this thing. But if all of a sudden we're able to get it at $5 and then it shoots back up to 20, you know, that's a 4x gain. So we'll have to see. But again, not looking to pick bottoms on stuff like this that's showing only weakness. Alibaba got that gap up. I still expect it to come back down and fill the gap. This gap up, this bounce, this final, like, you know, this to me looks like a dead cat bounce off of essentially them paying out that $2.4 billion. So even though they paid out a ton of money, it was like a quarter of their cash balance sheet, or a quarter of their, I think it was a 10% or a quarter of their profits for the last year. So that's nothing. They're absolutely crushing it. So if you're crushing it and then you get fined, but you get fined less than you crushed it by in the last year, what are you going to do? Keep crushing it and not care. It is getting rejected at a key Fibonacci level, showing only weakness, only, you know, it's a descending triangle, same thing, from the top to the bottom. If this thing decides it's going to capitulate out of our descending triangle, you know, let's take a rather conservative view on this one and just get an idea at what we're looking at. And again, this is a log chart, so it's going to be percentage based, not dollar based. We could very easily see this thing at like $160. So while I'm massively bullish on Alibaba in the long run, if it sells down past this next level, it's going to look absolutely horrible, and it's going to very likely look like it's essentially just selling off the wave 3 of a massively bullish pattern, which obviously if you've been watching this channel for any amount of time, you know my bullish target to the upside is $430 or the 2.618 at $630. But do you want to buy it at 220 and it ride it to 440 or 600 or whatever? Yeah, sure, that's a 2 or 3x. But I would much rather buy it at 167 and ride it to 600. So paying close attention, but in all reality, I do expect further downside until this thing shows a little bit of life. So Zoom is next. Zoom looks like gold. Looks weaker than gold because it's not even making it now to the top of the channel. But I do expect further downside. I'm looking to buy Zoom somewhere in between like 260 and 280. You know, I expect this thing after its massive run to show weakness as the reopening, you know, becomes more and more evident. But in the end, I think Zoom's here to stay. I don't think somebody's going to come in and dethrone Zoom. But who knows? Maybe, you know, Microsoft and its new technology and acquisitions are going to come in and take over, and, you know, Zoom's going to lose market cap, lose value, whatever. It is below the 200 exponential. The 200 exponential has a negative slope. 200 simple, it's well below that, and it's starting to roll over. So as far as I'm concerned, this thing entered a macro uptrend on the daily back at $78, ran up quite a bit, and now it's getting ready to enter a macro downtrend on the daily at $330. So once again, until we see some life out of this, And you notice all the big movers in tech look like trash, and then the actual tech sector doesn't look that bad on an ETF. And that's a reason to own an ETF when the market's underperforming, and a reason to own individual stocks when the market's overperforming, or when those individual stocks are overperforming. PayPal, same thing, showing weakness, got the bounce up, got rejected at the 618, but overall potentially entering into an uptrend, an internal retracement of our top from 310 down to 222, 224, whatever. I expect it when it sells back off to come back down to either the 382 or the bottom of our channel right here, somewhere around there. But again, I think that's probably a buy at like 250, as I think PayPal overall PayPal and Square have definite futures. What could cause this thing fundamentally or technically to all of a sudden look bad? If it breaks down out of this channel, puts in a new low, or all of a sudden banking regulations come into effect, they could get absolutely crushed. Apple, still bullish on this. Basically hit our measure move target, almost hit like our actual trade target. Essentially made it above the 618, but getting rejected. I expect continuation out of this. We're still inside the bullish control zone, where everything's bullish on the TJD, TDMACD. Everything's bullish on the Jewel Thief. Everything is bullish on the moving averages. Could we sell back off here? Yeah. Are we at an all-time high? No. Do I expect this thing to be at all-time highs by the end of the year? Yeah, probably. But again, you're probably not going to get rich off Apple percentage-wise. It's more of like a blue chip stock, in my opinion. Now, let's look at Pinterest. Boy, did this candle tell us exactly what was going to happen with Pinterest, or what? We literally spoke exactly about this candle right here. This candle right here. This shooting star. It shot up almost to the previous all-time high. Got a massive, massive rejection. And when I say a massive rejection, why do I say that? Well, it pushed up way high and was used as a selling opportunity. The wick is now over twice as long as the body of the candle. Excuse me. And the body of the candle closed red. That is the most bearish type of candle you can get at the top of a big move like that, at what amounts to a double top. And what happened next? We get another bearish candle, not quite as bearish, and then a massive dump, capitulation move. And obviously, take profit target was, that's why you front run these take profit targets. Because if you rode this up 21% from our perfect buy back here, and then you didn't sell, and we're right back at where you were at, now you're up like 2 or 3%, you look like an idiot. And that's why you take profits. Not you specifically, but I would feel like an idiot if I rode this up, I was right about the trade, and then didn't take profits. And then especially after this candle right here, thinking, well, I'll just wait till it pushes back up and then I'll take profits. And then you just eat a 9.5% dump to the face. As far as I'm concerned, though, we have a low here. We have a higher low. I would expect this to get another higher low, another entry. Exactly what I was saying before this happened. I sell out, buy back in, buy the same amount at 10% less or 15% less, ride it back up again. Because as far as I'm concerned, what's happening right now? This is an ascending broadening wedge. We have higher highs. We have higher lows. We basically double topped. Could this sell off and dump back out of here and Pinterest, goes down? Sure. But more than likely, what's going to happen? We're going to find support here and then move back up to the top of the range. I will literally take this exact same trade again. 2-to-1 trade to the upside. Matter of fact, we don't even need this much of a stop loss, but I don't see any reason not to just take the exact same trade again. It looks like an easy trade. 2-to-1, crushing. And that's why looking at all these different things is so important. We're looking at technical analysis. Looking at fundamentals for investments, sure, long-term stuff, that's fine. But we're looking at technical analysis. And when we look at technical analysis, what are we looking at? A bunch of different forms of technical analysis. Looking at moving averages. We're looking at momentum indicator oscillators. We are looking at patterns, candlestick patterns, and also like chart patterns. So this is a descending chart pattern. This is a, candlestick. The candlesticks form our chart patterns. So we can look at one super bearish candlestick like this, like a doji indecision candle at top of a range after an IPO. This is Bumble, by the way, BMBL. Or like we looked at on Pinterest, and that little candle can tell us even more than an actual chart candle can tell us. We're looking at Fibonacci's. We're looking at all this stuff. What are those things? This is our Batman utility belt. And the more things we have in our utility belt, the more likely we are to succeed in these markets. So if you put a bunch of stuff in your Batman utility belt, and then on top of that, you master, risk reward, probability of success and failure, and then you couple that with, basically all that incorporates like fundamental and technical analysis. But if you incorporate all that with like risk management or like diversification of investments or whatever you want to add all those things in together, you end up much better in these markets than just some idiot that's like, I'm buying Dogecoin or I'm buying Coinbase because it's an IPO. I would rather have 100 reasons why I'm doing something or not doing something and be able to clearly explain those to someone. Even if they don't agree, they're not going to not agree with all of them. Maybe I tell you 20 reasons why I'm buying something and you disagree with 2 of them. We still have 18 reasons why I'm buying it. So if I'm wrong, I can look at those 20 reasons and say, why was I wrong about 18 and you were right about more than 2? And then I can make sure I don't make that again in the future, so I can quantify what is working, what's not working, and then I can figure out why. If I'm just coming into these markets and buying whatever's hot or whatever's good or whatever I feel good about or whatever I think is going to succeed, then I'm going to do crap over time because eventually you're going to be wrong. When you're using, all these different things and they're successful over and over and over and over again, you know what you're going to have? Not only more money in your bank account or more assets, you're going to have confidence because you're confident in what's working over and over again. A lot of people start off investing and don't know what they're doing and do well, and then eventually they get wrecked, and then they have trouble rebuilding their confidence. Take small positions, have a trade journal, build up confidence over time with small wins, take profits, don't be greedy, small wins, and eventually you're going to be that cocky dude who can tell it like it is and explain exactly why to anybody. And you can debate anybody anytime about any of these assets. You can look at any chart and tell somebody why you're bullish, why you're bearish, why it's fundamentally good, technically good, whatever. And you can argue it and feel confident about it instead of just saying, Bumble's good because girls should control who dates and dick pics are bad. So now let's talk about Bumble and what's going on here. Bumble IPO rather at $70, ran up to $85, and now it is at $60. What do I tell you guys about IPOs? You can either go from the IPO, it's down basically about 20% right now, or you can go from the top after the IPO tops out. It's down 32% right now. What is my rule on IPOs? I like to pay attention to them between 40 and 50% after they have that 40 to 50% sell-off. If we look at the measured move on the Bumblebee, and if you don't know what Bumble is, it's a dating app where it's basically like Tinder, but women get to pick who they match with and like contact you first, which I think fundamentally in society is probably where we're going right now, because dudes are just like not even bothering because they just don't even want to deal with like all the BS that's happening in our society right now. It's easier to just sit back and let a girl reach out to you. I think it's the same thing that's happening in actual dating right now. Like dudes are not like catcalling females anymore or trying to holler at females anymore or asking females out anymore. They'll just sit back and let the female do it because they don't want to get like, accused of sexual harassment at their job and potentially lose like their livelihood because they like came on to a coworker or classmate or whatever. So in my opinion, societally, I think this is where we're headed, to a society where things like Bumble are more important. But in the meantime, do I think this thing's going to get wrecked? Well, if we take the measure move, which that is, this right here, basically from the top of the triangle to the bottom of the triangle, if we take that measure move and we just peep where that's pointing to, it's telling us that Bumble's probably going to go down to about $38. So I'll probably pick some up at about $38. And what is $38 from 70? It's basically like a 40% sell-off. What is $38 from 80? Basically a 50% sell-off. So Maybe it doesn't get there and I just won't own any Bumble. But in all reality, what is this pattern? A giant descending triangle. What is more likely to happen right now, especially since we opened up here at $69? That means anybody that bought this thing since it opened is negative. And it's just a matter of how negative you are. So we have a bearish chart pattern. Everybody that's ever bought this thing that wasn't an early investor, anybody that's purchased this in the public market, not like OTC, is negative in this thing. More likely than not, if it breaks down from this level, it's going to have a capitulation sell-off. Who's been selling all this? The people that got into it early. What does that tell you? They don't believe in this. Because if they believed it was going higher, the early investors would not be selling out. So in all reality, I expect Bumble to capitulate from these levels. At which point in time, like fundamentally, I think it's a good app. It's better than Tinder probably in the future. But right now, crush. VanEck Semiconductor ETF. Again, I told you about the ETF and why I'd rather be in the ETF right now than like Taiwan Semiconductors. Because who knows, Taiwan might not exist in a couple months. And they're like one of the key producers in the space. That's where we get the majority of our stuff. Our semiconductors are coming from like China and Taiwan primarily. So I would rather own an ETF than own, a company that might not exist in a country that might not exist. And if you're not sure why I say it might not exist, watch the news because it looks like China is preparing to expand. So basically, semiconductors massively bullish. I expect this to sell back off, come back down here, and touch the bottom level right here. At which point in time you can take this trade once again. Exact same trade, just like Pinterest. If you didn't take profits up here and then it comes right back down, you're gonna feel like an idiot. But I think very likely we'll be able to pick this up once again at 240. But again, that's why double tops are so important, because a lot of times you'll come up to the top, slightly higher, slightly lower, or exact same top, and then you'll sell back off. Maybe this doesn't dump here and it just continues to the upside, at which point in time it will look bullish. But it looks like we're about to exit the bullish control zone. We're about to get the hard sell. Last time that happened, we got a massive dump. We also have quite a bit of weakness. A bunch of red histograms in a row. Looks like we're about to potentially lose the slope line. So what does this mean? I mean, maybe this thing ran a little too fast. Maybe all of a sudden a bunch of semiconductors are just going to show up, or production numbers are all of a sudden just going to take a dump and people are going to realize that the economy is not looking as good as they thought it was. I don't know. But fundamentally, I'm bullish on semiconductors. Technically, the chart does not look great in the short term, but it does in the long term. Walmart doing exactly what we said. Broke out of the range at the top here. I still expect it to come back up, fill the gap back at 144, and then that to me is going to look like basically a gap fill, at which point in time I expect it to potentially capitulate back down to the bottom of the range. Or if we consolidate here long enough, maybe I'll take a trade along off this level to a new all-time high. Invest in it because you like people at Walmart. Don't invest in it because you hate Walmart and you're invested in Target and their competitors. I don't care. I'm telling you what I'm doing, what I'm looking at. But I don't think Walmart's going anywhere. And I think no matter what happens with the economy, no matter what happens with Amazon, I look at Walmart as the Amazon of, retail shopping. It's always going to be there. People are always going to use it because it's cheap, it's fast, and it's easy. And then the people that have morals and don't want to shop at Walmart where people wear their underwear to the store, maybe they go to Target. Or maybe they don't want to buy stuff that's made in China, so they go to Target or, one of the more upscale places. But the truth is, people are always going to shop at Walmart, and people are always going to shop at Amazon because they're cheap, regardless of their moral opinions, values, whatever. Walmart ain't going nowhere, in my opinion. ARKK, underperform, looks like trash. ARKF, underperform, looks like trash. ARKG, underperform, even more. Looks even trashier. ARKW, underperform, looks like trash. ARKQ, underperform, looks like trash. Kathy Wood, I'd probably hit it. She's older, but honestly, I'd still smash. Even if it was just to do her a favor. All right, just rewind 20 minutes. Let me scroll back here and see what's going on. Hippie Live's going to pay people $15 an hour to run on giant hamster wheels. Well, my problem with $15 minimum wage is that what is minimum wage? Commander Corn, what is minimum wage? Minimum wage is the minimum amount that you need to be useful for somebody to hire you as a job. So as a business owner, if I'm looking to hire someone to do a job, I hire you. If you can't make more than $15 worth of profits for me, I don't hire you because it's a net loss. So I'm not going to hire you. So what is minimum wage really? Minimum wage is the amount between zero and hireable. So you're either worth $0 to me because I won't hire you because I'm not going to make profits, or you're worth minimum wage to me, or I won't hire you because I'm not going to make profits. So if you're young and have no skills, if you're middle-aged and have no skills, if you're old and have no skills or very little skills, you better figure out how to make yourself worth more than $15 an hour to a business owner, or what's going to happen? You're just not going to have a job. So if you don't have a job, who supports you? The government. Where does the government get its money? From the people, from taxes, from the Federal Reserve, or whatever. Is that a sustainable model? No. So if all of a sudden we raise the minimum wage everywhere to $15, which where I live right now, it's like $7.15 or something, $7.50. So if they double the minimum wage right now, what's going to happen? The people that are able to keep their jobs at minimum wage are going to make twice as much money, but probably like 75% of those people are going to get fired because they're not worth $15 an hour. So what's going to happen? Places like Walmart are going to say, yeah, we're not going to hire you because you don't make us $15 an hour. Therefore, we're going to just put in more machines. People like Burger King, McDonald's, like everywhere you go is going to be touch screens where you just order your food and there's going to be no employees. You're going to slide your money in to a vending machine like that's going to take your money and spit out coins and give you back your change. You're going to touch a monitor and order your Biggie Mac and large fries and supersize your Coke, and there's going to be no humans around to deal with anything, and you'll be lucky if there's even a human in the back cooking your food, which means, you know, it's probably going to be like a robot arm flipping your burger patties and then like a little robot like spitting out on an assembly line your cheeseburger. So maybe it'll look better. Maybe it won't have a ridiculous amount of mayonnaise on your chicken sandwich. Maybe your fries will be perfectly crisp and golden brown every time. I don't know. It might be better. But how's that going to be for, you know, old, you know, 750 Johnny that has no actual skills, that's just getting by or barely getting by? Well, he's going to be on welfare. So I'll be paying for him and a lot of you will be paying for him. So, you know, that's cool. We'll just have American socialism 100% at that point in time instead of 75%. So in my opinion, unsustainable, but you know, that's fine. I mean, if that's the way people want to go, we vote on these things. So if we're just going to keep voting on this stuff and it's going to keep winning, then obviously the people are getting what they want. So if that's what people want, if people want more taxes and more deficits and potential crash of the entire economy so that people can make $15 an hour and lose their jobs or whatever, sure, that's cool. And then in the end, I guess we'll realize if socialism works or not. Got quite a few rants in today. Pretty good. I would say like we're about 2 hours and 8 minutes in. I've like gotten some pretty good rants in, and we also knocked out a ton of TA. So I would say this is overall a very productive stream. How am I playing copper at the moment? Using ETF or miners? Yeah, I mean, there's a couple ways you can play copper. Like it's honestly like, to me, I think copper probably will have some sort of a pullback in the near future, but I'm so bullish on copper long term because of infrastructure like copper pipes, because of infrastructure like, you know, electricity needs to travel, and silver is better conductor, gold is better conductor, but copper is like obviously like cheaper. So I'm so bullish on copper long term. I'm not worried about it the same way I'm so bullish on like Caterpillar or something like that. But you have you can look at a couple of the ones I'm in are CPER. That's like the copper index. It's basically just a way to like trade copper index fund. Or what's the other one? JJC. What is it? JJC is another one. And then there's quite a few of like the other metal miners that I'm in that mine like copper, gold,
and silver or combination of those. Also, while we're talking about energy and infrastructure and everything, like potential like clean energy or whatever, or like EVs, lithium is also something I'm extremely bullish on. LIT is like lithium, like battery stock. The XLE we always talk about. The ICLN we always talk about. What else? Nickel. Nickel is another one I'm extremely bullish on. Again, it's very useful inside of like the EV batteries and stuff like that. So, but overall, just in general, like like commodity metals and precious metal space, I'm overall just mad bullish on. Commodities in general, but metals specifically. Yeah, so I guess my answer, CW, is both ETFs and miners, um, but not physical copper. Obviously, we talked about that in the last video. A lot of people buy like physical copper off of like bars or coins or whatever, and while they're cool and you can call them collectible or whatever, people don't realize that the copper price, like when you look at like futures, is in pounds. So you think like copper is at $4 an ounce, but really it's like $4 a pound. And then you go on like these coin exchanges or whatever, and people buy like, an ounce of copper, like a coin, and it's only $2 an ounce, and they think they're getting a deal, but they're really like losing 50%. Um, well, way more than that. They're buying something in ounces that they think is denominated in pounds. So you're way better off just buying copper digitally, investing in copper digitally. And it's just too big and too heavy for the cost of it, the price of it, to be worth having like physical. It's not like gold and silver. Because the reason to own gold over silver is because it takes up 70% less space. The reason to own silver over copper is because, it takes up, if it's $4 for a pound of copper versus, you know, 25 or $30 for an ounce of silver, it takes up substantially less space. So, at some point in time, if copper is worth $100 an ounce, then yeah, maybe it's worth having, denominated in ounces. But as far as I'm concerned, I would rather just hold less gold or less silver or less platinum, like smaller denominations, and then use it for like physical exchange. I don't think there will ever be a time when it's worth holding physical copper, but investing in like an ETF or like a mining stock is the way to go, in my opinion. Thanks for all the interactions and questions, guys. J Tree says, your thesis lines up with mine. Bulldozers are way cooler. Yeah, who doesn't want to invest in bulldozers? I mean, if you're a man or a girl that played with boys' toys when you were younger, or some combination of a man, boy, woman, girl thing, which is fine, and you just like bulldozers and, cool yellow toys with big wheels and like, I mean, I played with like all those toys when I was a little kid. So, I mean, shit, look at what are they called? Transformers. Like the old Transformers that were like bulldozers and cranes and all that stuff. Like from a young age, you like that stuff. So it's obviously cool. Why not invest in it? Especially if all it does is go up and we're going to need it to build like anything ever. I say go with those big diesel machines. CW says, can we look at MSOS ETF? Sure. I'll look at a couple more. If you guys have any requests, throw them up right now, and then I'm going to get out of here. I don't want to go too crazy long. I did not actually eat lunch before I hit you guys with the stream today, so I'm pretty hungry. Yeah, I'm not actually familiar with this one. What is it? Okay, cannabis ETF. I mean, I don't have to tell you how I feel about them because I talk about it every stream. Massively bullish on cannabis. These markets topped out way before. Oh, okay, this one's relatively new. I'll have to look at what's actually inside this. I'm not really sure, but honestly, it's probably the same as like all the other ETFs. Let me look real quick while we do a little TA. It's probably the same as all these other ones, which is like some Aurora, some Canopy. All right, here I got it right now. CBD MD, Power Right, Charlotte's Web, Zynerba, Hemp Fusion, Arena, Perkin-Elmer, Grow Generation, Innovation Industrial, BlackRock, Liquidity Treasury Trust Fund. What the hell? It's over 73% BlackRock. I mean, it's got a lot of other good names in it, but why is it 73% invested in BlackRock Liquidity Treasury Trust Fund? That doesn't really seem like a cannabis ETF to me. Yeah, it's really weird. But again, I mean, it's probably going to perform how the rest of the space performs, but that is strange to me. And again, it happens a lot of times, especially with like newer stuff. If you're underperforming, if the overall market or sector is underperforming, a lot of times they'll diversify heavily into something else, but it doesn't really make sense. Which, obviously they did well though, because from when they started, they went down for like 4 weeks and then they've been up ever since. We are below the 8 moving average on the weekly, finding support at the 21, closed slightly below it. It looks like it probably has some more downside, the same way like the overall cannabis sector probably has some more downside. Um, probably should have got out of this at like $50, which means you're probably down about 20-25% right now, which is not good. It looks like a descending triangle. Looks like it's going to be selling off, honestly. Where does it sell off to? Where would I be looking to potentially buy at? Probably, let's throw a fib up on here real quick. It's basically in between the 236 and the 382 right now. I would probably be looking to add to your position or reaccumulate or get into this slightly lower at like $38, which is basically where we're at now, or more realistically like $33, $34. If it goes down to the 618, $29. If it goes lower than $29, I would probably not be interested in this thing. Showing no divergence right now, but potentially going to start showing some bullish divergence. But overall, just making lower highs and lower lows. Looks weak. Looks very weak. I would look at some of the other ETFs, which some of them aren't looking amazing right now, but at least they're already printing bullish divergence. But again, not financial advice. I'm not your financial advisor, but there's a couple things that tells me this is probably not the best place to have your money now or in the future. But that is really weird though. That I would have to look into it a little more and see why it's so heavily into BlackRock, honestly. Yeah, it takes up too much space, J3. I completely agree with you. Doing her a favor? Yeah. I just like to make you guys laugh. No, I tell her how it is though, for real. I disagree, bro. No one is putting money in the vending machines and getting coins back. They'll pay with their phone from an app. Yeah, yeah, yeah. I mean, I agree with you. Like, my point being that there will be a computer or machine that's doing it instead. But we still have a ton of vending machines. But see, I live in a tourist place. So I live in a tourist, like, economy. So here we have literally vending machines everywhere. We have snack vending machines and drink vending machines everywhere. There's a million hotels, timeshares, and they're all packed full of vending machines. There are vending machines literally outside at arcades, all up and down the strip. There are vending machines everywhere. And then if you look at a place like China, China has mad vending machines everywhere, but they're doing what you're saying, where they have like their phones and digital. But the majority of our vending machines down here now, or at least all the new ones, maybe like, I don't want to say the majority, but all the new vending machines down here, all like the Pepsi, Coke vending machines and stuff, you can just use your credit card now. Or you can scan, even like the parking meters that they have now, they have like apps and stuff where you basically go in on your phone, scan like the little barcode where your car is parked, and then you pay online hourly or whatever, you buy a pass. So I totally agree with you that it's going digital, but my point is the vending machine and the cash factor is irrelevant. My point is that the jobs will go away and technology will take their place because people are not worth $15 an hour. Most people that are making $7 an hour are not worth $15 an hour, or they would probably get paid $15 an hour already. And then if you live somewhere where minimum wage is $12 an hour, the difference between 12 and 15 is not that much. So it will be less important. But if you live in the South United States like I do, or one of these other places like I do, there is no freaking way. And part of that is, again, because we have a ton of like immigrants here. Like we have like the school kids that come on like exchange programs from like Russia and China and, all over the place. We have a lot of like illegal Mexicans that work in restaurants, illegal like Venezuelans that work in like restaurants or whatever. And a lot of those people are getting paid minimum wage or like, in construction out here, less than minimum wage. If all of a sudden the minimum wage goes to $15 an hour, two things are going to happen. Less of those people are going to get hired, or none of those people are going to get hired because they're not worth $15 an hour. So they're going to get replaced by either one more valuable employee. And when I say value, I don't mean as a person. I mean like to a business owner, like functionally, they create more value that makes them worth $15, or they're going to get replaced by technology, like the machines we talked about, or you're just going to force more people out of the legitimate workforce. And then now you're going to have business owners that are breaking the law, hiring illegals, or you're going to have, as an employee or as an illegal, or even if you're not an illegal, you're going to be working under the table. So now the government is getting less tax dollars from those people. It's now turning regular people that are functional business owners or employees or already illegal immigrants into criminals. So is that really the system that we want? Do we really want to turn regular people into criminals just so they can survive because they don't want to be living on, off of the system, off of taxpayers? I mean, that's not the future I want to live in, but that is probably the future that we will live in if we get $15 an hour minimum wage. Yeah, exactly. And that's a thing down here too. Like if you go to a scrapyard and you go to like trade in copper, you have to have an actual license, like to scrap metals down here. Anything other than like aluminum and I think it's tin cans and aluminum cans, might be steel too. Anything other than them, you have to have. And you know what? Honestly, my license is a couple years old now and probably about ready to be renewed. When I go back in, I'll see because they've been getting tighter and tighter on the licenses. So if you want to even scrap metal, you have to have a license. So, I mean, copper has been one of the things you have to have a license for. And I mean, it's still only worth a couple bucks a pound, but people are going into like Home Depots and places like that and just pocketing fittings and then taking them to the scrapyard. I mean, if that doesn't tell you like red flag, like why are you bringing these new fittings with price tags on them into the scrapyard to be melted down and turned into copper so that they can make fittings out of them? Something seems wrong here. PLBY, CW, we will look at PLBY. Oh, and just while we're talking here too, Bitcoin dominance hit our target too from yesterday or 2 days ago, like perfectly. Could Bitcoin dominance continue to dump? Yeah, sure. Will it? I don't know. We'll have to see. I mean, but we're at a key level now. What is PLBY actually? I'm not familiar with this, I don't think. And I'm going to clear my throat and get a drink and then we'll take a look. I guess I could look it up myself, but looking at the daily looks good. Let's look at a longer like oh, okay. I mean, can't really do technical analysis on this. It's a couple months old and all it's done is go up. So I mean, there's nothing really I can tell you here. Yeah, I mean, it's in a blue sky breakout from inception. So whatever this is, it'll probably keep going up until it doesn't. And then after that, we can pay closer attention. I can take like this top right here to the bottom right here. You know, we can take our top from $17 and our bottom at like $11, and we can put a Fibonacci extension in place, you know, which obviously was substantial because it topped out that last top at 2.618 Fibonacci at 32, and now it's basically, it's almost up to the 3.618. So I think more than likely it heads up to 47 bucks or $61, but it could very easily head back down to $31. So, but again, I mean, overall it looks fine, looks great, but there's not really much we can look at right here. Let's do another fib from that previous top that we just talked about and see where that's pointing at. You know, the 1.618 is basically where we just topped out. The 2.618 is at 56 bucks. I mean, so yeah, look, I'd be looking at realistically, it either already topped out right now and is going to pull back to a key level like I just said, or it's going to go to 47 or 55 or 61 or 75. I mean, but again, you know how I feel about blue sky breakouts. You know how I feel about assets going up. They're going to go up and continue to go up until they don't continue to go up, at which point in time, you know, you can pay attention to where they're topping out. But other than that, it's just Fibonacci extensions. But yeah, I mean, it looks fine for now. CW wants to look at Rio and SILJ. Which Rio do you want? Rio Tinto? Is that what it is? I'm assuming that's what it is. Let's zoom out on this one. Rio Tinto on the monthly. I mean, it looks like it's approaching its previous all-time high on the monthly. Overall, looks bullish, but you know, it's probably not one of the best performers considering. You know, this all-time high was 2008. So you know what this chart looks like? This chart looks like the ETF on the European stock market, or just in general the European stock market. It looks like the FTSE. You know, it's taking out all-time highs from 2000 or cycle highs from 2011. It has a low. It has a higher low, you know, on the macro, but overall, still below its all-time high. It's taken out its previous cycle high right here. Looks like it's potentially topping out, finding support off of that breakout, and now it's going to get continuation. So in all reality, I would expect this thing to probably be headed up to its all-time high pretty soon here. Now, could that fail? Of course. But I think more likely than not, it probably just hit a key fib level and found some resistance. So yeah, it's at the 786 right now. So let's see what happens. It broke above the 786, bearishly engulfed, pushed straight back up to the 786. So if it tops out right here, I would expect it to sell off, but sell off to a higher low than either $24 or, I mean, realistically, I would expect it to head back down to 60 bucks. And then that's like a key resistance, turn support. So I think more than likely, I'd be looking to buy this at 60 bucks, not financial advice. I would be looking to buy this at 60 bucks and then potentially ride it up to the 886, which if it came down below the 0.5, you know, you'd be looking at realistically like 26% stop loss with the 82% potential gain to the upside. Now, I wouldn't want to have a hard stop in this, obviously, but you know, that's a 3-to-1 risk reward. But I wouldn't want to enter where we're at right now. We're at resistance. So I would look for a pullback or a consolidation above basically where we're at right now. If it consolidates here long enough, I would expect further upside. And at which point in time, you know how I feel. If something makes it back up to the 886, it's more than likely going to new all-time highs. But, you know, could potentially double top. But after this long of a consolidation, after a top in 2008 and consolidation, the fact that it's approaching its all-time highs again, it's more than likely going to make new all-time highs. Now, before that happens, there's probably a pretty high likelihood that it pulls back down to 60 bucks. But again, this thing could just run and you never get a chance to get it that low. But I mean, you should have got bullish on this thing, or I would have gotten bullish on this thing back here, right? Once we got above the 200 exponential, 200 simple slope to the upside, your entry is like 46 bucks. So we could very well still sell off back down to 46 bucks and you could get an entry into it at that level. I don't think it's nearly as likely, but if you did, I would basically put my stop loss below the 382 and say if we took out that previous wick, I'd want to get out. But this thing is responding very well to fibs because when it bottomed out at the 0.5, it wicked down to the 382. And in all reality, you know, if you can get it down there and just ride it back up to the previous all-time high, that's 200% reward to the upside with a 28% risk. So, I mean, if you can get a buy on this thing at 45 bucks, it's golden because that's like a 10 to 1 risk reward. So Rio overall looks good, but probably topping out at least short term right now. The question is, will it have a sell-off or will it just have like basically a consolidation? Your guess is as good as mine right now, but we'll probably know in the next like couple weeks. And then what'd you ask about? Oh, SILJ. I mean, to tell you the truth, you know how I feel about silver and the miners, and obviously, you know, the juniors are just higher volatility, so there's a little more risk, a little more risk and a little more reward, a little less stability. But overall, I like SLJ long term, but short term, I mean, it doesn't look great. It just looks like what silver's doing. Basically, silver topped out at like 30 bucks. This topped out at like 17. Silver bottomed out at like 22 bucks. This bottomed out at like 12. This is looking a little less like a sideways channel and a little more like a flag. But overall, a flag in an uptrend is bullish. You know, it had a couple little sketch spots right here where it gapped up and sold back off, gapped up and sold back off, moved up and then sold back off. I look at these more as anomalies or failed breakouts, but just looking at the chart, it looks like a flag to me. So I would say you're at the top of the range after 1, 2, 3, you know, maybe 4 failed breakouts. So I would say more than likely, obviously it's going to do what silver and gold do. Silver and gold are both at resistance right now. So just looking at that, looking at this chart right here, I would say more likely than not, this is going to dump. Now, where's it going to dump to? 14 bucks. I mean, what is that really? It's like 10%. So, you know, the reward to the upside, if this gets a breakout and continuation, is massive. The risk, if it sells off, is, you know, probably 10%. If it breaks out of the bottom of this range, I'd be worried. But in all reality, I mean, you know, it's like a 2 to 1 risk reward right here. Just if it goes back to like this all-time high. But in all reality, I mean, you know, if this thing is going to get like a real burst to the upside, if silver is actually going to break out, which eventually it will, but is that going to be in 10 years? I don't know. Your guess is as good as mine. I don't think it's going to take that long, but it very well could be, you know, another 2 years or 5 years, or, you know, you guys know my silver chart goes back like 30 plus years. And, you know, it's a giant cup and handle. So eventually we're going to break out over 35 bucks and then we're going to just rock it up to 50. My next target is 90, then 300. But my actual target on silver is $500. But what is $1 when silver is worth $500? I don't know. It might not be worth anything. $1 might not be worth anything when silver is worth 500. So did silver really go parabolic up or did the dollar just go parabolic down? I don't know. We'll have to see. But in all reality, you know, if this breaks out, consolidates, and gets continuation, which you don't want to get stuck in a trade like that, you know, you're looking at probably the 1.618 is 30% move to the upside with a 10 or 12% move to the downside. So risk reward is good from here, but you're doing the opposite of what I like to do. I don't like to buy resistance. I sell resistance, buy support. So I would buy the support when it sells off and sell the resistance. So I would be a seller on this right now, not a buyer. But if it consolidates here long enough, which last time it consolidated 4 days, well, consolidated for 3 days and then it got a massively bearish candle. Here it consolidated 4 days got a massively bearish candle. So I would want to see this thing consolidate for a week. I would want to see a weekly consolidation and close above that. Let's look at the actual weekly chart. I mean, yeah, see, so that's perfect example. On the weekly chart, we close on the weekly here, we gap up and then bearishly engulf. So you never got a weekly open and close that looked good. Here, we gap up, get a bearish engulfing candle back inside the range. These are massive rejections on the weekly. Here, massive rejection on the weekly. So what I want to see, I don't want to see a situation like this where it gaps up and then bearishly engulfs. So let's see what happens. This weekly just closed. Let's see what happens next week. And let's see what happens in silver spot markets and gold spot markets next week. If this gaps up and then bearishly engulfs, I'm not interested. If it opens anywhere above this level and then closes anywhere above this level, so if we get a confirmed open and close on the weekly, so if next Friday we're looking at this chart and there's a green candle, I would get bullish on this. If there's a red candle and it looks anything like these two right here, where it's back inside the range or big, I'm not interested. It's going to look like the same thing over again. And then if we actually look at the weekly like support and resistance here, depending on how you look at it, we have like a bottom, a same bottom, and then we have like sort of like higher lows here. You know, you could look at it as almost like more of like a tightening range, but there's nothing too clean. I'd leave it how it is on the daily and then just flip over the weekly. But overall, you know, bullish that the 8 and the 21 never crossed back over on the weekly, but I'd be real careful on this bad boy right here because it looks like a trap over and over again. And if you're the guy who keeps buying the breakout right here, you're probably already broke. You probably gave up and you should have just bought Dogecoin. Not financial advice. J Tree says you should check out DAN. Weekly 5,200 costs, fits the reopening trade, but is also going to be a major supplier for e-vehicles. DAN. I'm trying to think off the top of my head. What is DAN? Dana Incorporated? I'm not sure I'm familiar with that, honestly, man. Doesn't mean it's not good. It just doesn't ring a bell. And I'm definitely not invested in it. But again, that's why I like you guys, because you turn me on to what you like, and then I can look at it and see if I like it too. So look, DAN on the weekly, I mean, it looks good, man. The thing we got to worry about is this did have a similar move like this where it went parabolic and then sold back off to basically a new low. Yeah, I'll have to look into this because it has quite a bit of history, but I don't know what it is. Dana Incorporated. I will look into this off stream when I'm not wasting your guys' time and tell you like fundamentally what I think. Technically, it looks good. It had a low back here, higher low. It had a high back, you know, basically opening and then died. New high. It looks like it's approaching to take out its 2018 all-time high / cycle high. So overall, higher highs and higher lows. Now, right now, it doesn't look amazing. But it looks like on the weekly, it's just getting ready to enter into a long-term bullish uptrend. So you could say short-term, it doesn't necessarily look amazing. It looks like it's topping out at the 886. Probably going to sell back off. But if it consolidates here long enough, it's probably going to be at its all-time high again, which is like 50% from where it's at right now, 30%. But in all reality, you know, probably looks good. Let's look at our fib extensions on this thing. The 1.236 says $58. The 1.618 says $130. I mean, yeah, that's a nice move. Like, in all reality, if we assume it's going to sell back off here and at least come down, I mean, it already sold back off to the 786. So in all reality, it either did its move already or it's going to sell back off lower. So I would be looking for a buy at the 200 like below the 200 exponential, 200 simple at like the 377 at the 618. But just like I always do for every chart, you know, when did we get bullish on this thing? you would be bullish on the weekly right in this range at about 20 bucks. It's already up like 30% since then. If I was going to right now look for an entry point, I would look to buy the 618 and then ride it back to the all-time high. If it's sold off below the 0.5, I would be worried. So I would either take another buy off the 0.5 or be worried that it's like not going to do what I'm hoping it's going to do. So that's 25% stop loss. Obviously, soft stop, in my opinion, with 125% upside. So that's 5-to-1 risk reward ratio. I would take this trade all day. And then in the event that it actually breaks to a new all-time high, which based on the chart, technically, I would say looks more likely than not. Let's just say, for instance, I'm just going to put 2 trades in place here. You could put to any of these other fib extensions. The 1.236 would be a key one at 57, or in this case, my overall target would be the 1.618. That's a 743% upside with that same 25% downside. So risk reward on this is like 30-to-1. So I might take a 30-to-1 coin flip, I guess. No, I would take that all day, man. But I would be looking for an entry off the 618 at 1550. Now, if it consolidates here long enough and gets above the 886 or finds like continuation support at the 786, I would probably be willing, after looking at this chart and like if I actually look at, fundamentally whatever this is. I know you said it's like EV, but I'm really not familiar with what it is off the top of my head. Even if you took the trade off of the 886 with either a stop or another entry off the 786, I would rather buy off the 786, honestly. But let's just say you said right now, I love this company, I want to buy it now, and you're not in it. If it does break up to that target to the upside, that's 378% for a 22% risk reward. So it's still like 16 or 17-to-1. The likelihood of this thing hitting that target one way or the other, in my opinion, is very likely. So this could be another one of those trades. This could be the Dogecoin of the EV market. What was this one? We're looking at Dan right now. Dan, I'm going to leave it up here and I'll look at it again and see. Playboy. CW wants to look at Playboy. Look, man, there's only one way I look at Playboy, and it's not the chart, if you know what I'm saying. I read the articles. But for you, I'll look at the chart. But I'm going to tell you right now, man, I don't care how good this chart looks. I'd rather be looking at a Playboy than looking at a chart of a Playboy. But I really don't know. No, this can't be right. Am I looking at the right thing? Is it PLBY? Is it Playboy Incorporated? Playboy Group Incorporated? Is that what you want? Why doesn't it have more history than this? I'm on the daily? Look, I'm going to tell you something I know for sure. Playboy has been around since before 2020 because I had one when I was like 15. I'm old school Playboy user. I don't know. I'm not sure. I thought Playboy was a publicly traded company. Maybe not. I don't know. I never invested in Playboy as a stock. I invested in Playboy as a magazine, though, on quite a few occasions. But $10. And now it's at 38. I mean, it's basically making all-time highs. It's a pretty bearish looking daily candle, but I mean, there's, it's a blue sky breakout, obviously. But I am curious about why this thing doesn't have more history. That is weird. But let's just go from like this pretty significant swing high here at 1650 to the swing low at 1096. That, and obviously it's getting respected because look, from that top to that bottom, we topped again at the 1.618. We bottomed at the 886. We topped again at the 2.618. We bottomed at probably the 2.0 and then shot up above it. So in all reality, we're probably going to make it to the 3.618. So I think you're probably headed to like $49, maybe 4.236 at $63. But is it looking toppy? Not really. I mean, it's a pretty bearish candle overall. But in all reality, man, like, you know, it's all green histograms. It's just crossed again to the upside on the Stochs. There's a little divergence with the knife here, and it is kind of a bearish candle, definitely a bearish candle. But I mean, in all reality, if you lose the 2.618, if you lose $32, I might get worried. Now, granted, that's 20% down. Do you want to take another 20% down from where we're at right now? I don't know, but I'm assuming you're probably already in this thing from a low level. I mean, but what's the upside in comparison to the downside? I mean, who cares? Because this thing has basically gone parabolic. So if you got into it, you know, anywhere, you probably would have got into it at, I would imagine, like $10 or $11, or on that pullback, once we crossed 821 back to the upside, maybe like $14. You're probably up like 3x on this thing. So I would sell half, take it out, and invest it in Penthouse. No, I'm just kidding. I mean, me personally, I would sell half and put it back in my trading account or whatever and let the other half ride. And then if we start seeing like some bearish long-term stuff, maybe show up, or maybe take profit at the 3.618 or whatever. But in all reality, you're more than likely, you're already up at least 2 or 3x on this thing. So, but yeah, I think I'm going to call it there, guys. Definitely appreciate all the interaction as always. Hopefully we got everybody's requests. I think I hit them all there. I know you guys are liking these Friday streams, so you can definitely expect that they will continue. The real question is, do you prefer the Friday morning streams, market open, or the Friday close streams, market close? I think, honestly, the Friday close stream makes more sense because we can see how everything looks going into the close or closing, because a lot can change between Friday morning and Friday close. But again, if the timing works out better in the mornings, I can do that. I just figure like a Sunday night stream works really good because it's before everything opens. The same way a Friday night stream works because it's like, or a Friday afternoon stream works because it's like as or after everything closes. And then the Wednesday like mid-week stream after everything closes, like Wednesday night, works real well. So that's why I kind of picked those. But again, I'm trying to like basically like help everybody from every country. And I know a lot of like you guys that are Europe and whatnot, the timing, the nightly streams are not as good. So hopefully like this like early afternoon / evening stream works out good for my European and whatnot, Asian, all you guys that are non-North America. Anybody that's not in my time zone, basically, in all reality, is what it comes down to. So well, there you have it, guys. Just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Don't listen to anything I say in these videos. These are purely for entertainment purposes only. I have no idea what's going on. I literally just go on Twitter every day and then just regurgitate what they say on Twitter. I don't know anything about technical analysis. I do not even have any stonks, any cryptos, or any money to invest in stocks or cryptos. I shorted Dogecoin and lost all my money. So don't be like me. Don't short the Doge. Don't bet on the cat. What else? If you listen to what I say in these videos, which is purely just comical, joking around, you'll be wrong about everything, especially politics, fundamentals, and technicals, and you will end up living in a van down by the river with cats. So yeah, that's it for today. Crypto Trend Trader. Appreciate all the positive support, the love. Share with your friends. Subscribe. Like the videos. Comment. Tell me where you're at. Tell me what times are best for you. Write anything in the comments. Help your boy out. Yeah, that's it. Crypto Trend Trader, and I'm out of here.